rates. Perhaps that's in the short term, but ultimately, I think they're both going to have to do what's right for the economy.
What is your base case on what is right for the economy right now? What do you expect the FOMC to deliver through the year ahead?
Look, I mean, I think it's such a dynamic world, and all the factors that go into that are changing. I mean, the most recent factor is the bill itself, right? And we've got a new round of stimulus. So we've got macro risk, we've got the stimulus, we've got AI, we've got productivity. There's just so many things swirling around. But certainly, I think that those cuts are coming later than they might have a month ago.
I feel like a broken record, but honestly, how stimulative is the one big beautiful bill when a lot of it is just an extension of the current policy we have right now out of Washington?
I guess, I mean, there's stimulus, and, we haven't talked about the potential effect of deregulation, but I guess it's just whether you maintain the punch bowl or not. And let's say if it's, maybe it's not stimulus, but if you take away what's there, then obviously that's going to create a headwind.
Is that enough for the remainder of the year, given the uncertainty we are dealing with? We still don't have finalized tariff rates. And of course, now it feels like we're living in purgatory every day on what's going to be the latest salvo between the White House and the Federal Reserve.
Look, I mean, there's a tug of war between all that you mentioned there, between the fundamentals, which, may be improving because of the bill, maybe decaying because of the tariffs, what have you. But what we really haven't talked about are technicals. And so much of what's going on in this market is about technicals. And, 2 years ago on your show, everybody came on and talked about they were sitting in cash at 5%. And there was no opportunity cost for that. There's a ton of FOMO out here, fear of missing out. And as long as there's cash in people's pockets and FOMO, markets are going to continue to grind.
So give them an idea this morning, Robert, on what to do with that cash and the fear of missing out in, say, emerging markets. I'm sure you can't share specific trades with us that you've got on at the moment, but just an idea of what you like and what you don't like.
Look, I mean, I think in a world where I just said, the highest certainty is uncertainty, you need to make sure that you're certain with the portfolio that you're building, that you really anchor that portfolio, whether it's in debt or equities, what have you, in high conviction. And for us, that means kind of this better approach, not just thinking about beta in emerging markets, but thinking about how to approach emerging markets. For us, it's, a lot of the high conviction comes from private credit. Private credit in emerging markets looks like developed market 15 years ago, senior secured, collateral, uncorrelated collateral, et cetera. So the real opportunity here is to make sure that you have high conviction.
Robert, appreciate your time. As always, it's good to hear from you. Robert Koenigsberger there of Gramercy Funds Management on the situation with the Fed and DM starting to look a whole like EM.
Yeah, definitely is. And obviously for someone like him who has that experience, what he's looking at, almost maybe this is easier. But something he said remains true for the Trump administration. You have to expect that volatility is going to be high. It's the biggest conviction trade, and it is here to stay for the remainder of the 3.5 years.
Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. Now, the latest on the Air India flight that crashed just 32 seconds after takeoff. Sources telling us here at Bloomberg that a cockpit voice recording indicates a younger co-pilot asked the captain why he turned off the plane's fuel supply switches, and the pilot denied turning off the switches, according to that cockpit voice recorder. Elsewhere, New York Fed President John Williams is backing the central bank's wait-and-see approach. Williams shared that he still expects tariffs to have a bigger impact on inflation in the months ahead, calling the Fed's stance on monetary policy modestly restrictive and entirely appropriate. And JP Morgan racked up a $30 billion profit in the first half, more than double its closest rival, and widened its lead over Goldman Sachs and Morgan Stanley when it comes to investment banking revenue. Its market value now exceeds that of Bank of America, Citi and Wells Fargo combined. And that's your Bloomberg Brief. John.
Lizzie, thank you. More from Lizzie in about 30 minutes. Up next on the programme, the economy holding up.
So if you look on the consumer side, in our 70 million consumers who engage with the economy every day, because they're employed and because wages grow, they are continuing to grow and spend more, and that helps the economy.
Up next, we'll catch up with Krishna Mamani of Lafayette College from New York. You're watching Bloomberg TV.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equity futures on the S&P down here by 0.1%. Your scores so far this Thursday morning, pretty mild, the move lower. On the Nasdaq, totally unchanged. On the Russell, the small caps down by 0.5. Under surveillance this morning, the economy holding up.
So if you look on the consumer side, in our 70 million consumers who engage with the economy every day, because they're employed and because wages grow, they are continuing to grow and spend more, and that helps the economy. They've got money in their accounts, they're employed, and the wage growth has been relatively strong, and you know, so they're in pretty good shape.
Here's the latest this morning. Investors looking ahead to jobless claims and retail sales due out in just under an hour following mixed inflation data earlier this week. Krishna Mamani of Lafayette College saying, whether I like it or not, markets are treating the current environment as almost Goldilocks. Krishna joins us now for more. Krishna, good morning.
Morning, how are you?
Do you like it?
Well, so, you know, if you kind of think about it, the underlying economy, as Brian Moynihan was talking about, remains relatively strong. I would have expected it to weaken some, but there's no sign whatsoever on that front. So as long as that is together in place, and, you know, with the tariff drama kind of fading a little bit, and with all the machinations on the Fed side, markets anticipating rate cuts next year, if not in the near term, I think that's a good mixture. And in a way, it's a good mixture, and if we combine with the current valuations, it's basically redoing 21, 22. So, you know, we will have a speculative rally, and kind of there's no point sitting that out, but at the same time, recognize that it may not last for as long as you may think.
2021, 2022.
Yes.
The boom and the bust.
Yes.
Led by tech?
Well, so if there is going to be a bust, it cannot be without tech, because that's where most of the oomph is. So I think if that's the thesis you play with, I think that will include tech in it for sure.
Now, given what you're saying, that's not necessarily a reason to sit this out.
No,
in
absolutely
fact, it might
not
be an argument to stay in it.
Absolutely. I think, again, you know, given all the uncertainties that we had beginning of the year, it was worthwhile sitting it out. But now that is out of the realm, I think sitting it out would really be bad investing in a way.
Until when?
Well, until either the economy starts slowing down or the policy uncertainty kind of comes together in one you know, cohesive way, and you see fall off in investments and things like that.
Let's talk about the price action this week, and forgive me for making this really small and just about this week. We always say on this program, it's something people think about on Wall Street. You can learn something from the data and how the market responds to it. This week's data is the earnings. Earnings from the bank's pretty powerful, very good. Bank stocks are down on the week. What's the signal that you take from that?
Well, so, again, bank stocks had done, extraordinarily well.
Precisely. Huge rally.
Exactly.
40% move.
Exactly. So I think that was in anticipation of higher earnings because of the market volatility. So I think this is a little bit of, buy the story, sell the news kind of the thing.
Begs the question, though, Krishna, whether we need a step up in the macro, the backdrop, whether you need to see a new tailwind, a fresh tailwind for earnings, what it is you need to get this equity market to take another leg higher.
Well, so I think the outlook for earnings is decent, but it's not spectacular. The outlook for economy is decent, but not spectacular. If anything, the turn is probably going to be lower rather than higher. So I don't think those are really the tailwinds for the market. The tailwinds for the market is basically the speculative frenzy that is going on right now. If you look at the underlying stocks, the things that are doing well are things that are really kind of bubble related in some fashion, tech bubble related. And that's what, it's kind of very difficult to unwind all of that in a hurry. That's really the driver of the market.
I want to ask you about policy, because you say we're almost in an environment of Goldilocks. At the same time, we're in the middle of trade wars, and the President of the United States was threatening to fire the Fed chair. How are we in a Goldilocks in this kind of political environment?
Well, so that sort of tells you the answer right there. That is, all of that is being discounted by the market, and rightly so. That is, the likelihood that a president who wants a stock market higher, interest rates lower, will do all the things that he is threatening to do, and the markets are interpreting it as just as much.
The market is interpreting this as taco, but what if they're wrong, and at some point between now and the end of the year, he writes that letter and sends it off?
Well, so if he writes that letter and it is 10, 15%, I don't think that is the end of the world for the markets at all, especially if that...
I mean the other letter. I mean firing the Fed chair.
Well, so I think the firing the Fed chair is really not equity negative for, because if he gets lower rates, that probably supports the bubble rather than takes a... I think firing the Fed chair is really bad for the bond market. Rather than the equity market. It may actually be, one can make a case that it's actually equity positive.
Are you more comfortable in stocks right now versus bonds?
Yes, I want to buy bonds because at 4.5 level or close to it, it's a really good buy from the long-term perspective, but not in the current environment, though.
What is stopping you?
Just the uncertainty, the political uncertainty. That is, the direction of the Fed is not ideal for bonds or the dollar.
When you say the direction of the Fed, the direction of the political pressure on the Fed, or the direction of what the Fed is doing?
Well, what the Fed is doing today is somewhat less relevant than what the Fed is likely to do in 2026. And that's what the market is kind of looking at. That is, right now we talk about firing Jerome Powell and all that stuff, but at the end of the day, that's really a 6-9 month transition period. It's really what is going to happen in the follow over the next 2-3 years. That's what the markets are looking at.
The market's looking for 100 basis points in 26.
Yes.
Would you fade that?
Well, no, but I think if the political appointment is what is being speculated in the market,
we'll get that and some.
And well, then some is probably will depend on how the rest of the committee plays along. The chair has an impact, but is not a supreme ruler by any measure. So we'll see.
Everyone's got a number, 450 right now in tens. What makes you a buyer? Never mind the backdrop. What's your number?
Well, I think 450 for a developed market with let's say 2% type growth and inflation continuing to trend down is actually a very decent level for a bond buyer. And there are plenty of bond buyers out there, especially given valuations in the equity market. The challenge is who wants to step in front of a freight train?
Krishna, it's good to see you.
Good seeing you as well. Thank
you, sir. Krishna Mamani there of Lafayette College. The freight train being the president or the bond market, bit of both right now, I imagine. All right, the 10-year 450, the 30-year just north of 5%, closing at that level for a second consecutive session. Up next on the program, fantastic lineup for you. Jim DeMar of Bank of America, Chuck Grom of Gordon Haskett, Francis Donald of RBC, and the United Airlines CEO, Scott Kirby, on an industry that's bouncing back. Equity futures right now, the S&P 500 negative by 0.1%. We talked about that bond market. 450 is a good level to buy. Krishna just doesn't want to buy it. From New York, this is Bloomberg.
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Positioning continues to chase higher. That has been the key driver of the market rally and the reason why equities have been able to defy all odds.
The momentum's coming from different directions. Is it enough to kind of turn the tide where the whole economy benefits? I think the jury's out on that.
One of the main risks that we saw were high valuations in a very concentrated market. We still have those same exact risks.
We think it's broadening this year. Equities are a great asset to capture that expansion.
The onus now is on the earnings and growth story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, 30 minutes away from economic data in America. Your scores look like this morning. Equity futures on the S&P, barely negative. We're down by 0.05% on the S&P after squeezing out a day of gains in yesterday's session. In about 29 minutes' time, we'll look at some economic data. We'll look at this. Retail sales in America plus jobless claims. Another read on the labor market.
I'm really looking forward to seeing these retail sales. Do we see any sort of tariff impact, which we saw under the surface in the latest CPI report? Or honestly, do we just see consumer fatigue? Remember everyone talking about how they went out, rushed these big purchases. People in my family even did it. Are we starting to see a consumer that's been fatigued, they made their big purchases, and they're starting to pull back a bit?
If they're fatigued, investors are absolutely exhausted. Exhausted by the last 24 hours. The reports that the president was about to fire the chairman of the Federal Reserve. The reports that he was waving around a letter in front of congressional Republicans, a letter which was a draft ready to fire the chairman of the Federal Reserve, and then he comes out and says, what are you talking about? We're not going to do that.
Right to my face. He said, I know I didn't sign a letter, I didn't write a letter, but I did talk to congressional Republicans about a, quote, concept of firing Fed Chair Jay Powell. He said they were for it, but he's a bit more conservative than they are. You saw a lot of tweets as well, even from Congress members saying, I have from a very good source that the Fed chair is going to get fired, which is why everyone thought a lot of this was credible. Although to your point all morning, Jonathan, the market just got a little taste. They didn't really think this was full credibility. They thought this was potentially a Trump put or taco trial balloon testing what potentially could happen.
Yesterday afternoon, the price action was tame. If you believe that's what it's going to look like, that's what it's going to look like if the chairman of the Federal Reserve is fired, I don't know what to tell you. Equity futures right now, the S&P, just about unchanged. Coming up this hour, we'll catch up with Jim DeMar of Bank of America with stocks finding some stability. Francis Donald of RBC counting down to jobless claims and retail sales. And later this hour, the CEO of United Airlines, Scott Kirby, as travel demand, Anne-Marie, really starts to bounce back, particularly for the second half.
Second half. What United is saying is they see a strong second half. And this comes after, remember when they would give two different guidance, depending on if the United States was going to continue growing or if it was going to be in a recessionary environment? What you heard from United echoes what we heard from Delta. They think the uncertainty is behind us and it is clear skies straight away.
A lot of people have just moved on. We begin this hour with stock steady as investors digest uncertainty around Fed Chair Jay Powell's future. Jim DeMar of Bank of America writing, volatility has whipsawed global markets. That's been good for the markets businesses at Bank of America. Jim joins us now for more. Jim, good morning.
Good morning.
It's good to see you.
Great to see you.
It's great to catch up. Masses of volatility.
Yes.
You can have the good kind and the bad kind. Why was this the good kind?
You know, we like to think about everything in terms of channels. You know, when there are channels of price action, channels of volatility, those tend to be better opportunities for investors to put money to work. You know, if we were sitting here 10 years ago, the bigger conversation was financial repression, right? And if you look at realized volatility in both the equity markets and in the rates markets, let's focus on the U.S., realized volatility is considerably higher than where we were then. And you see a lot of investors, you know, macro strategies are becoming much more popular today than they were 10 years ago when it was just difficult with suppressed volatility to deliver alpha. And so I think, you know, volatility's here. We're in a different, you know, political and economic environment than we were 10 years ago. So my suggestion would be get used to a higher degree of volatility.
You think this is an ongoing feature of this regime?
I think just where we are in the economic cycle, I mean, things are just very different, right? We're going to have increased, you know, there's increased spending happening in infrastructure, in technology, in defense. We've got high levels of debt in the developed world. That becomes, you know, more topical depending on what other actions are taking place or headlines are hitting during a given day. A lot of focus on Japan, you know, for the last month and a half. You know, in April, we were talking more about the U.S. markets and concerns about, you know, a failed Treasury auction, which I think was extreme, you know, to say the least. But, you know, in the end, some of these larger structural issues remain. And I think we'll go through periods of, yes, there's obviously concern about, you know, Fed independence and what could happen there. You know, and I think you've had pretty much everybody on the show talk about it for the last you know, 24 hours.
Please give us your opinion.
The last 24 hours, Fed independence is good. I'll leave it at that.
If it starts to be threatened, what does it mean?
I think people are going to wait to see what happens. I don't think anybody's going to be is going to exit the markets on concerns that is a certainty. I think with many things that have transpired over the last 90 days, there's a test period. You know, theories are tested in the markets. Markets respond. That information is filtered back into the decisioning process, and we're going to continue. You know, we're going to continue on that path. But I do think, you know, when you think about the sovereign debt levels in developed, you know, economies across the globe, that is a real concern. It's going to keep popping its head up or rearing its head until there's some resolution. There was a lot more talk about it until the bill was passed. Now it's again a focus on Japan, and I'm sure there'll be talks about other countries in Western Europe and in the UK as we continue on that path. So I think betting against volatility is not a good strategy for the near and midterm.
When it comes to volatility right now, what makes this environment potentially different, or I guess you can mirror it to Trump 1.0, is it's politics and policy that is driving this in financial markets.
Yes, and again, I think that's why it's a materially different environment than we had, post the financial crisis up through COVID. While we had different administrations, the policy path was still pretty consistent, regardless of Democratic or Republican administrations, and the Fed policy was very consistent, and it was QE for a large part of it, and that was a repression in volatility, and that environment is no longer here.
What's the number one question clients ask you?
Wow, that's a really great question. I think the biggest focus remains on whether we're getting cuts this year, or not. And there's some pretty strong views on either side. And that's really a bigger question on what do we think inflation looks like? Is it transitory, or is it going to remain at a higher elevated rate? I would say the second largest question, if you get out of the bond markets for a second, is, the AI investment period that we're in today. Is it a bubble? Is it a high correlation to what we saw, in the late 90s going into 2000? And, there's stories written on that every day. I think what's very clear is that the investment is going to continue for the near to medium term, whether it's a result of corporations or sovereign, governments being focused on AI being critical to economic growth and safety. And so you see that all around the world, governments are making it one of their top mandates to be a leader in AI.
It's driving equity markets in a massive way, basically at all-time highs still.
Yes.
On the S&P 500, very close. And credit spreads are super tight. High yield spreads are very, very tight. Do you see that as justified or a sign of complacency? There is a man at another bank who believes that maybe it's a sign of complacency. Don't have to name him today. I want your opinion on that.
Yeah, I mean, we go through periods of, when the market's down, nobody wants to buy it, and everybody gives 15 reasons why it's going to go lower, and it goes up, and then people give you reasons why it's not going to go, it's not going to go any higher. I think the markets in general and people were, as humans, we have a certain degree of fear in us, and we're worried about what could happen and what could be life-threatening, and that's just human psychology. And post the financial crisis, we look at it and say, okay, what are we missing? I think a lot of what the issues are that could result in a repricing in assets across the markets, they're all out there. The question is, are the markets reflecting that in their current price? To me, that's really the question that you always have. And, the debate is today, you could sit with people today and they'll tell you that, the real level of rates in the U.S. market in the long end is too high, based on what their expectations are. The converse of that is people saying we're concerned about long-term debt because of structural budget deficits. Flip it over to the equity markets. There's many people that are excited and saying AI is real. It's going to drive productivity. We're going to see a boost in earnings across, across industries and across sectors. And then there are others that say, well, this is just another bubble, and we've seen this play through. It's a good opportunity for us. We have a lot of clients that are thinking about things differently, and obviously, our strength is intermediating risk, lending to them as they pursue these opportunities, and that's what we're focused on.
What I sense from you is that now there is a bias to act. In early April, it felt like a lot of people were just paralyzed by the backdrop.
Yes.
Where's the bias to act coming from? Are they just moving on from this policy story in Washington, or have they got the clarity they want, or at least enough clarity to just move on?
I think that's a really great question, and I think it's difficult to answer, but I would answer it this way. You start with framing what are the extremes that could happen, and then getting comfort within that. And I think at the time when the tariffs were announced, the concerns were how, this could be a material negative impact on global GDP. Okay, and that was reverberating. And at the same time, we just happened to have Treasury auctions, within a week's time. And then so you had this period of disruption in the equity markets, uncertainty. You get to the bond markets, we're having large auctions. Someone starts to focus on, and it proliferated in the market, what the participation rate was of foreign investors in the 3-year note, which, if you go back and look at the numbers, yes, that was a high single-digit participation at the time, but that's not the first time it's been a high single-digit participation relative to participation, in double digits. But, if you wanted to find negative dots to connect to come up with a very negative story, we provide, the markets provided it.
So a few months ago, 20-year auction.
Yes.
Nobody in fixed income cares about the 20-year treasury. Nobody.
Nobody.
And then all of a sudden you have a soft 20-year, and all of a sudden that's a reason to sell everything.
Yes. So to that point, I think that framing and then bringing it in, and as some of those outliers or the extremes of those risks are framed and framed narrower and narrower, that's when you get you get positive sentiment.
When you talk about those extremes, you also think that the president has set red lines, what he's willing and not willing to do, this idea of a Trump put. Do you think investors have taken that on board?
I think that he's a very smart man, and he's very connected to what's happening in the markets. I don't think that that's the only driver of his decisions, clearly based on what the statements have come from him in the administration. But that being said, we are one of the most powerful economies in the world, and you need to be cognizant of that. But I do think that there's, if you're being objective and independent, you can frame things, I think, and get to a point where where the extremes could be, and those extremes have been coming in, and I think that's giving people more comfort to make some of these decisions. I mean, sector trends that are happening in equities, the investments happening, it's happening with people that have the capital to make the investments. It's clear that the need is there. Now, whether it's going to result in the productivity or cost saves, that's going to take more 2, 3, 4 years to see that. So I think for that sector, but then you have an energy investment that's happening, defense, which is, globally that's becoming a thing. So I think if you look at those sectors in the equity markets, people feel comfortable that there are strong fundamentals and technicals, and it gives them the kind of strength and optimism to carry on. I think the bond markets are going to keep the volatility up, and Brian mentioned it yesterday. We went through a historical period of low front-end rates that was unprecedented, and I don't think those times are coming back. I think there are people that run certain investment strategies and certain people in the real economy that would really like zero interest rates, and I think that's why you're seeing some of the correction continue in the real estate market, just because interest rates are normalizing higher, and we're going to continue to see challenges for those industries. And I'm not highlighting just the real estate industry. If you were a highly levered company and you were used to borrowing short term, that's no longer a viable strategy.
Can we finish at the long end of the curve?
Yes.
Is the character of developed markets, sovereign debt markets, beginning to change? Typically, by definition, when bad things happened in DM, you bought the bonds.
Yes.
You bought treasuries.
Yes.
It just feels like that story's starting to turn. And we have these moments of stress where we see equities and bonds trade in tandem together.
Yes.
It's not just the US, we see it in Europe, we're seeing it in other countries too.
Yes.
What's happening, and how are investors changing?
Well, I think you hit it, and that was one of the big concerns, for smart investors that saw that price action, stocks down, bonds down. That's not a good sign for health of the markets from a historical perspective. And with that being said, and with the concerns about the deficit, I still think, the markets are telling me, I think that there's still optimism that there's going to be, a better deficit environment on a go-forward basis. If you think about it, meaning maybe we're going to get growth that's higher than that's projected, and perhaps the deficit, the structural deficit that we have, won't remain as large as what's been feared. If you think about it, the bill was passed, the information's now clearly out there. This is what everybody was worried about, and there hasn't been a significant sell-off. I'm not saying that there hasn't been 10, 15 basis point moves, but people are talking about a 6% long bond as a given, not as a possibility, just months ago. So I do think that the calmer heads are prevailing, and people just want to see this data flow through the system and see this policy flow through the system.
Let's hope it stays that way. Let's do it again soon.
Yes, great. Great to see you. Thanks for having me.
Thank you, sir. Jim DeMar there of Bank of America. The 30-year, not at 6%, of course, today, at 5%, thank goodness. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump said he's not planning to fire Fed Chair Jay Powell. He made the comments to reporters in the Oval Office following reports that he discussed the idea with a group of Republican lawmakers. The president added, "I don't rule anything out, but I think it's highly unlikely unless he has to leave for fraud," referring, of course, to his recent criticism of the Fed's $2.5 billion renovation plan. Elsewhere, AI spending momentum seems to be holding up as TSMC raised its 2025 revenue growth outlook. It raised its projection after the chip maker reported a better-than-expected net income, keeping a streak of beating estimates every quarter since 2021. TSMC said that it'll stick with plans to spend up to $42 billion to upgrade and expand capacity this year. And Walmart is cutting hundreds of store support roles. The cuts represent an ongoing effort by the country's biggest employer to make its large workforce more efficient. Earlier this year, Walmart cut corporate jobs and asked some workers to relocate to its headquarters in Arkansas and in California. And that should be my brief, John.
Lizzie, thank you. Up next, the Morning Calls Plus. We'll catch up with Chuck Grom of Gordon Haskett, just ahead of retail sales. That data dropping in about 13 minutes' time.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the quarter of risk for where the tariffs will start to hit. But the market's already thinking about this as a temporary impact. I'm hoping we get a pullback to some degree. This is what the beginning of a new bull market looks like, right? It's just explosive. It doesn't let people in, right? The rate of change is accelerating beyond what you expected. So it's just, I think the pullbacks will be short and shallow, but I really can't see more than a 5 or 10% correction.
That was Mike Wilson of Morgan Stanley looking for a pullback, and if we get one, he wants to buy it. Got a small pullback this morning, not even a tenth of 1% on the S&P, unchanged on the Nasdaq 100. That's the price action. Let's get you some morning calls. First up, Scotiabank initiating a sector outperform rating on Oracle, seeing it as a top AI infrastructure provider. That stock is up by 0.7%. HSBC starting with a street low price target of 32 on CoreWeave, expecting weak cash flow. And finally, Jefferies cutting Starbucks to underperform, saying the valuation is unwarranted and seeing a same-store sales slump in the third quarter. Let's stick with the consumer. Retail sales just moments away. 8:30 Eastern Time. Joining us now is Chuck Grom of Gordon Haskett. Chuck, welcome to the program. It's good to catch up as always. Looking ahead to retail sales, I just want to understand from your standpoint, looking at the various companies that fall under your coverage, what's doing well right now and what's struggling?
Yeah, well, you were just talking about rates with your prior guest, and we think the home improvement space is still struggling. You know, there's not been a lot of activity given where interest rates are, and big ticket spending is under a lot of duress right now. So I think home improvement has been soft into the second quarter. We'll get some color on June sales, like you said, in about 10 minutes. I think conversely, the spaces or verticals that have been doing better are really anything with value. So warehouse clubs have been doing better. Costco, BJ's, the dollar stores have started to improve after a couple of years of being under a lot of duress. So DG, Five Below, Ollie's are all doing better. And then we think companies like Walmart are significantly outperforming Target. So anything with value, we could probably throw an off price there too, are doing better. And like I said, home improvement softer right now.
Chuck, do you see an impact of tariffs just yet?
Great question. No, not yet, but we think we're close. We do a lot of monthly pricing work. We just did it in June, and on average across our group, we're up about 2.5% relative to April. But all the companies we've talked to over the past week think we're going to start to see price increases in about 4 weeks. So right in the thick of back to school is when we're expecting it, and we're expecting to see it throughout the balance of the year. So right now, no, and I think that's why consumers have been holding in. It'll be very interesting to see how we see elasticity in the coming months when prices start to go higher.
When you talk to these businesses and they think that there will be some sort of tariff effect coming down the pipeline, how is it spread across the supply chain?
It's generally like a third of the suppliers are absorbing it. A third, the companies are finding ways to absorb it either through cost cuts or other measures. And then we think about a third will get passed on to the consumer as of right now.
How difficult is it going to be potentially to read this retail sales report? Because there's tons of stories and data about the fact that people were hoarding ahead of the tariffs to want to get ahead of it. Now we're going to the second half of the year. Do you think consumers are just fatigued at this moment?
I think there was a little bit of pre-buying back in March and April. I don't think that's going to probably play into the June report. It might in certain categories like appliances and maybe home furnishings. So to your point, you can't really read into pops in those certain verticals. I think we'll see that a better read probably in August and September on really the true health of the consumer. If you think about June and July for retail, it's kind of like January. They're not very important months. You really don't want to read too much into it. Back to school, obviously the second biggest time of the year after the holidays, is going to be a really important proxy for the group.
And just coming back to tariffs, the president's talking about that he's going to have 10 to 15% rate on 150 countries. He's actively engaged on the biggest trading partners. How important is it for those businesses you talk to that he finalizes rates so they could plan for the remainder of the year in 2026?
Yeah, we were talking with Walmart earlier in the week, and they're talking about how every day they got to go back to the drawing board on what they're going to price and how they're going to execute. I think just knowing what the rules of the engagement is really paramount. I think most companies can deal with what the rates are going to be, but just getting some finalization on that, I think, is very important for all these companies, and they certainly all want it.
Hey, Chuck, appreciate the update. Chuck Grom there.
All right.
I've Gordon Haskett. Thank you, sir. On the retailers, going into retail sales in about 5 minutes' time. Just going back to April. Can't really overstate this, overemphasize the importance of that meeting between the retailers in the White House with the President of the United States.
Basically telling him this is what prices could look like if rates stay at an elevated level. And what Chuck is talking about there is this can all hit consumers back to school. That is politically potent for this White House. They don't want to see families struggle to get their kids back to school when they ran on, we are going to make America more affordable again.
We've said a lot about the bond market pushing back, and the bond market did push back. Equities did too. Corporate America pushed back as well, maybe silently behind closed doors in meetings at the White House, but corporate America pushed back as well. Up next on the program, breaking retail sales, plus jobless claims and reaction from Francis Donald of RBC. From New York, this is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Economic data just moments away. We're waiting for retail sales and jobless claims. The scores going into that look like this. Equity futures on the S&P 500 unchanged, on the Nasdaq positive by 0.1%. In the bond market, check out the bond market. 2-year, 10-year, 30-year. At the long end of the curve, a close above 5% for a second consecutive session. This morning, up another basis point. The yield 5.02%. Yields a little bit higher on a 10-year and a 2-year as well. With that economic data, here's Mike McKee. Good morning, Mike.
Good morning, John. Right now we're looking at what's coming in from the rest of the world because we shop. Retail sales up 0.6 on a headline number. Americans and their cash registers. We were expecting only 0.1%, and headline sales had fallen 0.9%. The weakness was supposed to be in cars, but ex-auto were up 0.5%. So not as much weakness in automobiles as thought. Ex-auto and gas up 0.6 compared with 0.1% last month. This is all good news for growth in the second quarter. Jobless claims come in at 221. That's down from 228 last week, so also good news for the economy. Continuing claims, 1,956,000, just up a little bit from 1,954. So we're still seeing people having trouble getting jobs, but it isn't advancing as much as it had been. The Philadelphia Fed jumps 15.9 from -4. I'll check in a moment on the prices paid there. And import prices come in up just 0.1%. So no tariff effect there, but tariffs are not collected on import prices. They're collected after that. So that's not going to really show us a whole lot about what Trump policies are doing. I'm going to check into where we bought stuff, what we bought, and you can check into the markets.
Mike McKee, thank you, sir. I'll be back with you in just a moment. At the headline level, this is just better news. It's an upside surprise on retail sales. It's the right kind of downside surprise on jobless claims. That's what you want to see. The labor market doing okay, and American spending. Equity futures on the S&P still just about unchanged. Some price action developing though in the bond market. 2-year, 10-year, 30-year yields up at the front end by 4 basis points. The 2-year 392.76 on 10s up 2 basis points as well. 447, call it 448. And in the FX market, the dollar the strongest against the euro in about a month. Euro dollar at the moment looks a little something like this. 115.70. That's a better story to tell on a headline basis this morning.
Absolutely, a better story to tell also for this White House when you see people continuously push back on the concerns of the uncertainty of tariffs. Guess what? Americans seem to be looking through all of this. They are continuing to spend. When you see retail sales show a stronger than expected growth in June, and to your point, Jonathan, jobless claims coming down. This is a hot report, and it's definitely going to be taken with notice and optimism from this administration.
Michael McKee, it's a hot report on the first look. What about the second?
It's a little more mixed. This is a little bit like what we've gotten in the price reports over the last couple of days, because some of the stuff under the hood isn't quite as good. The big surprise is in autos. Motor vehicle and parts dealers up 1.2% after 6.5% the month before in May. Of course, everybody was rushing to beat the tariffs. Electronics stores down 0.1%, and furniture stores down 0.1%. Those are two areas that have been tariffed, at least coming in from China and some of the Asian countries. But we spent a lot on food, up 0.5%. Health and personal care, up 0.5%. Clothing and accessories, up 0.9%. So everybody was out getting their new swimsuits for the summer, it looks like. And sporting goods, up 0.2%. Often that's a category that is tariffed. Food services and drinking places, that reflects consumers' attitudes, and that was up 0.6. So that is good news, although it was up 6.6% the month before. So people backing off a little bit on some of the discretionary spending, but they are out there spending on other stuff, at least stuff that is not tariffed.
Mike McKee, stay close. Francis Donald with us around the table of RBC. Francis, good morning.
Good morning.
We had the pull forward. Where's the payback?
First rule of American economics, never bet against the U.S. consumer. This is what they teach you the first day on the job. Another report that shows you there is a lot of strength underneath this consumer, but we do have to be careful. Two reasons. This is a very distorted cycle, John. We had front loading, we have back loading, we have goods coming back, we have services rising, and vice versa. We have to be a little bit cautious about saying this is signal about where the American consumer is going next. And number two, I will die on this hill. There's a lot of fragmentation in this U.S. consumer right now. Lots of strength at the upper incomes, much less at the lower incomes. So, well, this is reassuring news, especially because that job market continues to hold on. We still see a moderation in the consumer in the second half of this year. But for now, let's take the win.
How do you think it shapes up at the FOMC later this month?
Well, difficult to look at a report like this. We still have not seen inflationary pressures come through. We don't have any cracks in the labor market. Now, our view on that, of course, is that that's more structural support than it is a cyclical indicator. But there's not a lot of data justification for a cut here. You got to do some real mental gymnastics in order to get it, especially because looking forward, the odds are that inflation is going to rise from this level. So you either have to see a material deterioration in the job market or something underlying growth that takes away your confidence on this in order to justify that cut. For us, the first cut's in December with a risk to later.
When you say moderation, second half of the year when it comes to the consumer, is that because they pulled forward and they were out hoarding, or is it because of tariff and the impact of trade?
So let's separate some of that distortion or dislocations from tariffs. That's going to include lots of front-loading activity, just like businesses. There's going to be symmetry between the two. But this is just old-fashioned economics. Higher interest rates, higher prices, higher debt loads. That's weighing on a huge amount of Americans. That's going to keep them from being able to sustainably accelerate over time. So the path is a little bit lower. We're not talking about a collapse in growth. We're just not talking about a re-acceleration. Think a gentle moderation or more of a maintenance type of spend.
You say December for the first Fed rate cut. That is not a Merry Christmas for this president of the United States. What do you make of what we saw the past 24 hours?
Well, I might say, actually, how much does it matter? Is 25 basis points in September or December going to change the American economy? I would argue not at all. We have significant amounts of spending. You're running 7% deficit to GDP. That's going to keep a floor under growth, no question. We know that the housing market is leveraged to the long end of the curve. There's not much Chair Powell or anybody in that seat can do about that. These are long-term global dynamics that are really pushing the U.S. economy forward or backwards. And so whether or not you have 1 or 2 or 3 or 0 cuts from now to 2025, I'm not sure that that's a game changer for the U.S. economy.
Mike McKee still with us. Mike, later on this evening, 6:30 p.m., I'm sure you've seen it, Governor Waller addressing the economy. Do you think he got additional fuel this week to present the argument for lower interest rates?
Well, certainly he does with this retail sales report, and the headline numbers for CPI and PPI would give you that impression. The question is, how worried is he about what's under the hood? Philadelphia Fed just saw a big rise in prices paid, up to 58.8 from 41.4. We saw earlier in the week that Empire was up for prices paid. So there are price pressures starting to creep into the economy. Now, it'll be interesting to see how Waller frames it, because he's been talking about the idea of this could be one and done. He expects prices to rise, but not to keep rising. So he could say that, and then he could point to these retail sales numbers and the jobless claims numbers and say there's no reason we couldn't experiment and cut once.
When does the Mike McKee tour come to an end, Mike?
We come to an end tomorrow. Today we have Mary Daly from the San Francisco Fed. We'll get her reaction to all of these numbers at 12:45 Eastern Time, and we'll see what she has to say about whether or not July could be realistic. Remember, 12 voters, and Chris Waller and Mickey Bowman are only 2 of them.
Mike McKee, thank you, sir. Looking forward to that conversation with Mary Daly, the San Francisco Fed president, later on this afternoon at 12:45 Eastern Time. Francis, just a final word on this Federal Reserve. We've had a few people come on the program today and make the argument that this political pressure is going to make it harder for the Fed to cut, not easier. Do you agree with that?
I think the hardest thing that's keeping the Fed from cutting is going to be inflation statistics in the second half of the year, and that is going to trump any political pressure that comes through. Maybe I'm old school, but at the end of the day, the data is going to be pretty clear that this is a tough cut until at least year end, and that's going to overwhelm, I think, the Fed's thinking on this.
And base case is inflation keeps firming from here.
We have inflation firming into year end, and that's a range of factors. It's not just tariffs, it's support under services. It's that OER calculation that's likely going to rise into year end. I don't even need tariffs in order to tell you that inflation is still going to be too hot for comfort heading into the end of this year.
Francis, appreciate it.
Thanks for
having me.
having me.
It's good to see you. Thank you very much for being here. Francis Donald there of RBC on the tension with the Federal Reserve and the President, and based on Francis's forecast, that tension's only going to build into year end.
And it's going to get worse. That's not going to be a Merry Christmas for the President if Francis is talking about the fact that we are not going to get a cut until December. Remember, people are talking about September, and we are only right now in July, and we've had reports that he is considering firing the Fed chair, and every single day, this is going to be maybe more disruptive for some people or opportunities for others.
If you are just joining us, some better news this morning on the data front. The economic data looks like this. Upside surprise on retail sales, the right kind of downside surprise on jobless claims. With an update on stories elsewhere, here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, John. A recap of that latest US economic data. Consumer strength continuing in June, with retail sales coming in well above estimates, rising 0.6% versus expectations of just 0.1%. Similar positive news, as you say, in the labour market, with weekly jobless claims coming in at 221,000 and marking a 5th straight week of declines. Elsewhere, Uber is teaming up with EV maker Lucid and self-driving startup Neuro to launch a robo-taxi fleet in an unidentified major US city by the end of 2026. Mysterious. Uber will purchase and operate Lucid Gravity SUVs equipped with Neuro's technology, and the deal is Uber's latest effort to become the go-to app for robo-taxis. And in sports, the first round of the Open Championship is underway at Royal Portrush, Northern Ireland. Denmark's Jakob Skov Olsen and China's Hao Tong Li are tied for the early lead at 4 under. Xander Schauffele is looking to defend his title, while Scottie Scheffler and Rory McIlroy enter play as numbers 1 and 2 in the world and winners of the year's first 3 majors. And that should be my brief, John.
Don't know if Mrs. Farrow knows this, but that's the weekend set. That's what it looks like. Okay? Lizzie, thanks for this morning. Appreciate it. Up next, we'll set you up for the day ahead. Plus, United Airlines CEO Scott Kirby has travel demand rebounds. Sitting down with Lisa in just a moment.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening bell about 46 minutes away. Going into it, your scores shaping up as follows. On the S&P, positive by 0.1%. On the Nasdaq, up by 0.2%. One name in focus in the pre-market for us this morning, United Airlines. United Airlines saying its outlook is now more predictable after a first half marked by flight cancellations, trade and geopolitical concerns. That stock is down by only 0.5%. Lisa joins us now from Chicago with a special guest. Morning, Lisa.
Good morning, John. Great to be here in Chicago, and thank you so much. I am here with Scott Kirby, the CEO of United Airlines, after earnings came out. And he really echoed what we heard from Delta, which was the first reporter, which is stability, solidness, a sense of recovery. You said the world is less uncertain today than it was during the first 6 months of 2025. What was the inflection point where you saw that certainty come into play?
You know, this year, a lot of uncertainty in the first half of the year, macro uncertainty, and that led to an impact on bookings and demand at United and across the whole industry. But it felt like there was a turning point at the end of June where the tax bill passed and the situation in the Middle East was calmer, and tariffs, while not certain yet, narrowing the range. And it really felt like people felt enough confidence or enough lower level of uncertainty that they kind of came off the sidelines and were unfrozen, and particularly for business demand. I mean, you can't stay on the sidelines forever, and that was enough of a trigger. It really was like a light switch flipped at the end of June, particularly for business demand, double-digit acceleration in business demand as we ended June, and that's continued, you know, through yesterday.
We've talked a lot about the K-shaped recovery and the idea that high-end consumers have really been driving the economy. Corporations kind of dropped off with business travel. As you said, they picked back up. What about the rest of the travelers, the main cabin? How much have they rebounded back to where they would have been had there not been some of the headline volatility?
So if you sort of separate it into those three pieces, business demand dropped off at the start of the year. That seems like it's bounced back to what we were expecting it to be as we moved into July. Premium and, you know, higher end leisure sort of stayed consistent throughout. It never really dropped off. And the biggest impact for the consumer was in low end leisure. And that's come back some in July, but not as much. I'd say that's sort of 50% recovered to what we were expecting at the start of the year. So business back to mostly a full recovery, and low end leisure kind of 50% recover. Premium leisure never fell off.
We've seen sort of one entrant into the CPI report. The idea of inflation has been airline tickets prices have been coming down. And there's this question of whether discounting is required to bring some of the main cabin back, and whether that's going to be a persistent trend, that competing on price is going to be really important. Now, how much do you see that as persisting into the second half of the year?
You know, the airline industry is always a good value and always has attractive prices. But I think it's more of a supply-demand imbalance, that there are a number of airlines, there are 2 brand loyal airlines in the United States who are now generating the bulk of the industry's profits because those customers that care about quality, that care about service, that care about technology, we're just better, and they're choosing us. And you can see it in the data, you can see it in the numbers. For the more commoditized part of the business, there's simply more seats available. There's been more seats available than there is demand. But encouragingly, there's a big change coming in mid-August. While we've talked about demand, and I've seen an inflection in demand, there's also an inflection coming in supply. As by the time we get to mid-August, there are a lot of seats. Same thing happened last year. A lot of seats coming out of the industry, particularly from the low-end carriers who've been struggling. Those seats are coming out. And so my guess is that's going to lead to a firmer pricing environment as we move into mid-August and beyond. Actually, we can already see that in our numbers for later in the year.
Are you expected to take any capacity out?
We continue to prune, but there's not going to be any structural changes to our capacity. And we are encouraged by the environment. And in fact, just in the last couple of weeks, for us at least, the yields have turned positive on domestic. They've been down, for several months as we started the year, but yields have now turned positive for forward bookings at least.
So why have you not gone with the more bullish potential estimates then for your forecast, given that you sound incredibly positive and you have seen this ongoing rebound?
Yeah, it's been a good year. I mean, it's actually pretty remarkable that we've grown earnings and margins for the first half of the year despite everything that's happened. But a lot has happened this year. And we like to have a policy of being conservative on our guidance because stuff does happen. And we want to be able to absorb some unexpected events in our guidance. So we intentionally build it conservatively. We do that all the time. So really what happened this time is we've been able to build that conservatism back. So, if nothing else happens this year, which is a big if, and if demand stays as strong, booking demand stays as strong as it is right now, there's probably upside. But we'd rather be conservative than get too far out over our skis.
One reason why I was really excited to speak with you is that you have a real-time view of not only the consumer and the appetite there, but also international demand, and whether there has been any damage to the brand Americana. The idea of foreign travelers coming to the United States for tourism, et cetera. You've said that there has been a drop-off in European travelers. How sustained do you expect that to be? Are you seeing any permanent shifts in that international inbound landscape?
There has been a drop-off in inbound demand. Europe is one, but it's a single-digit decline. And U.S. point of sale has more than made up for it, and it's 80% of our business. I don't think it'll be permanent. The United States is the greatest country on earth. It's a great place for people to come, a great place for people to visit. Demand is affected by all kinds of things. We have fewer students coming to the U.S. right now, not surprisingly. That's a big part.
Fewer?
Quite a bit fewer. I mean, enough. It's a relatively small percentage of the business, but when you're talking about 1%, 2%, 3% changes in demand, you can see it when you're talking about small changes. But my guess is that we will get back to normal. And people's desire to travel, see the world, whether you're an American or a European or a Canadian, is strong. This is a great place to visit, and my guess is it'll get back to normal.
And if you're a senior and you're applying to colleges right now in the U.S., you probably are in pretty good shape. That's all I can say. There's also a question about the further uncertainty, and tariffs are almost a certainty at this point. How do you expect to absorb them? Are you planning, or do you have a base case for whether you'll increase prices or whether we'll just hit margins more significantly?
For United, we're fortunate that most of our aircraft come from Boeing, so here in the U.S., and even the Airbus deliveries we have are mostly produced here in the United States. So tariffs don't have as big of a direct impact on us as they do perhaps on our competitors. The bigger issue for us is the impact that it has on the macroeconomy. And I feel really good. You were right earlier. You said we have a real-time indication of the economy. We're a very good real-time indicator of what's going on with the economy. Not always advanced, but good real-time. And it really does feel like something changed at the end of the June. The level of confidence, at least less uncertainty. People are moving forward. And I think on tariffs, there's a narrower range of outcomes. Like, probably not going to be 145% on China. There's a narrower range of outcomes, and people have had 6 months to sort of figure out how to deal with it and have some contingency planning. Whatever the reasons are, it does feel like there's more certainty.
With Boeing, do you expect the deliveries to be on time, or do you expect there to be more competition with all the other countries that are making deals to buy Boeing planes?
You know, that'll be an interesting point of what happens with tariffs. My guess is aviation ultimately will wind up excluded. It's the one industry, U.S. exports 6 times more aviation products than we import, so we have a big trade surplus on that side. So my guess is those will wind up excluded. But Boeing, you know, is back on track. You know, narrow bodies are actually ahead of schedule for us. Wide bodies are still behind. I think that's less a Boeing issue, probably more an engine issue and the supply chain for engines. I think that's a longer term, multi-year challenge to get the wide body back on track. But Boeing seems to have turned the corner on production.
I just want to finish on Newark and whether Newark's turned the corner. I do know that we could go for an hour about state area to try to diversify your presence away from Newark.
Well, first, I'm really pleased with what Secretary Duffy and the Department of Transportation and FAA have done at Newark. My entire career here at United, have been trying to get Newark on an equal footing with LaGuardia and JFK. That's essentially putting slot controls. Have the number of flights at the airport equal to the capacity of the airport. And we've finally done that. And you can already see the results. In June, Newark was the most reliable of the 3 New York area airports. And the future looks really good. So we feel really good about Newark, and it's a crown jewel, and we're going to grow it, and you know it's always going to be a crown jewel for United. But from the first day I got here to United, I've wanted us to get back into JFK. Our goal is to be the premier flag carrier of the United States, and we need to be in JFK to do that. So the JetBlue partnership is a great way for us to have a partner who has the same sort of culture on DNA for customers to get back, you know, and have a presence on both sides of the river.
Scott Kirby, thank you so much for taking the time today. That was Scott Kirby. John, I'm going to send it back to you from the United headquarters in Chicago.
Hey, Bramo, thank you. Looking forward to having you back in the studio and hopefully flying United and on-time flights, right?
Yeah,
That's what we want to see. Bramo back in the seat tomorrow morning. A bias to act, consumer, re-engaging, business spending, recovering. The message from Scott Kirby there. A big message from United Airlines.
Huge message, and they see basically upside to earnings target, and they say their goal right now is conservative. 2 things I really took away from that. 1, I've never heard Newark and crown jewel in the same sentence. Make Newark great again. It seems like they are doubling down, excited to see potentially some of the issues there behind them. Now a range of outcomes when it comes to tariffs. They really feel like they are turning a corner when it comes to the trade story. They say you've had 6 months, you've had contingency planning, and they even view what we are seeing right now, which is the fact that we're still waiting on tariff rates. They say that right now they have more certainty.
This market has turned a corner. Your equity market positive by 0.2% on the S&P 500 and very close to all-time highs. The opening bell about 35 minutes away. Coming up through the week at 4 p.m. Eastern Time, you'll hear from the President signing another round of executive orders. After the closing bell, earnings from Netflix. Friday, UMich sentiment. Sneak peek of next week. Fed Chair Jay Powell on Tuesday speaking at the FOMC's regulatory conference. On Wednesday, more results from Tesla and Alphabet. On Thursday, Intel and American Airlines. Coming up tomorrow, here's the lineup. Peter Oppenheimer of Goldman Sachs, Sarah Malik of Nuveen, Jack Caffrey of JP Morgan Asset Management, and Sarah House of Wells Fargo. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend.
big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
The data's good and the earnings are just fine, and futures are higher this morning with 30 minutes until the start of trading. I'm Shanali Basak.
And I'm Romaine Bostic. Matt Miller and Katie Greifeld, for some reason, are both off. Don't worry. Bloomberg Open Interest, it still starts right now.
And coming up, retail sales sizzle as Americans keep spending. And Netflix is going to take the earnings spotlight after the bell, a lot riding on the company's outlook for the months ahead. And a multi-billion-dollar deal. Uber is teaming up with Lucid and Nuro to launch a robo-taxi fleet. But Romaine, first we have some stocks to watch before the market opens.
Yeah, keep an eye on the chip stocks. TSMC, the big contract chip maker, hiking its annual outlook on strong AI demand, and that is boosting tech stocks across the space. Just one day after its key trading partner, ASML, actually said that it may not grow at all in 2026, Shanali.
Yeah, I'm also watching United Airlines here as well. We're watching all the airlines, but United is up now 3.3% pre-market. It's been fluctuating. It narrowed its profit range for the year, but it gave a profit range. Travel demand is poised to rebound as Americans keep spending. Now, CEO Scott Kirby joined Bloomberg in the last hour. Take a listen.
This year, a lot of uncertainty in the first half of the year, macro uncertainty, and that led to an impact on bookings and demand at United and across the whole industry. But it felt like there was a turning point at the end of June where the tax bill passed and the situation in the Middle East was calmer, and tariffs, while not certain yet, narrowing the range. And it really felt like people felt enough confidence or enough lower level of uncertainty that they kind of came off the sidelines and were unfrozen.
Scott Kirby, the UAL CEO, speaking just a few moments ago. Joining us right now in Studio 2 is Bloomberg's global aviation correspondent, Sid Phillip, and some relatively bullish comments out of that interview. When you look at UAL's earnings, you look at DAL earnings a few days ago here, is it blue skies ahead?
It's still challenging times. I mean, it's early days, and the airlines are saying that they just saw a turnaround in terms of demand sort of coming back at the end of June, early July. So we still have a little bit of the summer left, and then we go into the sort of slump season when people typically don't fly as much. So we have to see how it all plays out in the run up to the second half of the year and beyond, because at the moment there's still some uncertainty. I mean, Delta talked about it last week when they said that the back of the plane, the main cabin, economy cabin, is still hard to fill, while the premium cabin and long-haul travel is still holding up. So it's still early days.
Well, that was exactly what I was going to ask about, that bifurcation and the type of customer that these airlines have right now. Are we seeing a strong follow-through about worries about consumers that are not at the highest end?
There is, and I mean, that also sort of plays out into the whole low-cost carriers versus the regular full-service carriers, because a lot of carriers are seeing a sort of slump at the bottom end where there is more economic uncertainty, whereas for travelers at the higher end, they still have some spending power in terms of being able to spend.
Sid, we thank you for joining us here on set. That is Bloomberg, Sid Phillip. We're going to go back to that tech news that lifted the NASDAQ this morning that Romaine was just talking about. TSMC raising its outlook for 2025. Revenue growth to about 30% as demand for AI products showed no sign of slowing down. Bloomberg Tech co-host Ed Ludlow joins us now. Good morning, Ed. When you look at the comparison between what TSMC was saying relative to ASML, how do you parse through the noise of the differing outlooks from these companies?
Yeah, probably near-term sort of instant demand for products versus longer-term, right? When you build new capacity for semiconductor manufacturing, it's a multi-year process. TSMC is telling us that in the here and now, demand is really strong, right? AI demand is still hot, is what they said. And what's so interesting is this is a company now where 60% of revenues in that period are for high-performance compute chips that go into data centers. And it's increasingly pulling away from the smartphone market, which is also growing. But, you know, they kind of were like, we're a bit cautious. We're upgrading our growth forecast for revenue this year to 30%. It is cautious. That's the commentary because of tariffs. But it just shows that presently, in the current calendar year, fiscal year, whichever way you want to put it, the buyers of those chips are committed to doing it. Whereas with ASML 24 hours ago, those that are building out additional capacity, maybe they are showing more immediate caution to commit to those capital expenditure projects. Although TSMC is the biggest customer, right? That's the irony here, and they maintain that capital expenditures commitment for this year, which give the market a lot of confidence. And I think you saw ASML shares react positively too.
Yeah, you're definitely seeing a lot of shares across that space react positively to this here in the pre-market. Ed, you're also seeing a bit of action right now in shares of Netflix, up about 0.6% in the pre-market as we await their earnings report in the post-market. I know I'm not supposed to pay attention, Ed, at all to subscriber growth anymore, so I'm going to ignore that. Just margins, advertising. Tell me what to expect.
Yeah, I mean, Netflix has kind of been stamping their feet about this idea that they should be judged on normal financial metrics and that they want to be looked at on a bottom line basis, which is why we'll ignore them and we'll say, okay, if you won't give us subscriber growth, what does the content slate look like in the second half of this year? We know now that in this kind of streaming battle where subscriber growth goes in any direction or they won't give us the data, you kind of want some evidence that there's something worth tuning in for. And so like maybe on the close later today when the numbers post, we'll be asking, well, Romaine, is that something that you plan to watch or not? That might be a better metric to judge by.
I only watch 2 shows, Ed. The Close and Bloomberg Tech. Ed Ludlow, the co-host of Bloomberg Tech. Thanks. Open interest, at least for today, as we keep the show going. My apologies to Shanali there as we keep the show going here and focus in on the other big story this morning. And that was that surprise retail sales report coming in hot for the month of June, topping estimates pretty much across the board. Michael McKee joins us right now, our international economics and policy correspondent. Mike, you have a very stern look in your face, but when I looked at the numbers out of that retail sales report, it put a smile on mine. It seems like, at least for right now, we're still spending.
Well, if you think you're smiling, Romaine, imagine what the president's face looked like at 8:30 this morning. We didn't see much of an indication of tariff impacts, although some of the categories that are tariffed did come in a bit low. But overall, headline retail sales up 0.6%, driven in part by stronger than expected motor vehicle sales. They were up 1.2%. And retail control, the part that goes into the GDP, was up a strong 0.5% after 0.1% gain the prior month. What moved? Well, we mentioned motor vehicles. Miscellaneous store retailers were up 1.8%, and then clothing and building materials were up 0.9% each. Clothing a bit of a surprise because obviously that's on the tariff lift. And then after the retail sales numbers, we got jobless claims down for the week, and that is also a bit of a surprise because these are times when the auto companies are shutting down to retool their plants, and usually we see a jump in jobless claims. The one bad news thing out of the numbers this morning, the Philadelphia Fed, while the headline number rose, prices paid jumped from 41 to 58.8, which is a sign that maybe there are some inflation pressures on the horizon. But again, any problems with retail, with consumers, or with inflation remain on the horizon. So I would imagine that sometime this morning, not too long from now, you will see a tweet that says something about a certain person in Washington being too late.
Great segue, Mike, because I was going to ask you about the latest chapter of President Trump versus Fed Chair Powell. I want to read you this note from the team over at TD Securities saying that they view this as a low probability but high impact event. And the impact being this, they say. They say that we would expect investors to price in higher long-run inflation, higher term premium, more near-term Fed rate cuts, and hence lower front-end rates, increased market volatility, and a steeper yield curve. How does that compare to consensus, what you're hearing out there in terms of how traders are viewing this as a market event, whether he stays or goes?
Well, that is pretty much the consensus, and we did see it play out that way yesterday morning when the first headlines came out that the president might be ready to fire Jay Powell now. We saw spreads widen, we saw the front end drop, we saw the back end steepen, and that would suggest that that's the kind of reaction we're going to get, perhaps even more extreme if the president does move. However, I think the TD people have it right. This is a low probability event because if the president were to fire Jay Powell, the Fed's going to go to court, and this could drag on for months, and Powell's only got months left in his term, so there's not a whole lot of benefit to the president, and there's a high risk for him that the markets could go haywire.
Mike, we appreciate your time this morning. That is Bloomberg's Michael McKee. And catch his exclusive with San Francisco Fed President Mary Daly today at 12:30 p.m. New York time. I'm sure a lot of this is going to come up. And it's interesting. A check on futures here. You are still seeing them higher. You did see yields higher this morning as well, but you are seeing them starting to cool off, Romaine, a little bit on the front end of the curve. S&P futures, though, still up 0.2%. The NASDAQ 100, as you're talking about, 0.3% higher.
Absolutely. You talk about some of the individual movers out there. We're keeping an eye on Abbott. Abbott Labs, the forecast actually missing estimates as diagnostic sales shrank year over year. And then keep an eye on U.S. Bancorp there. The share is down here, setting up for what's going to be potentially, I think, the fifth straight day of losses. Net interest income missing estimates, despite the fact that you actually had some relatively strong numbers out of some of the larger banks a couple days ago.
Oh, totally. And it's interesting because U.S. Bancorp, remember, they're going through a management transition. Stock is still down almost 5% on the year, even more so with this morning's move. The regionals, though, have been outperforming this earnings season relative to the big banks.
Yeah.
So this one is a bit of an outlier so far.
Yeah, and as we look at the losing streak on U.S. Bancorp, a big winning streak for General Electric, setting up for a 7th straight day of gains. This is GE Aerospace to be specific, up 2% on the day after raising its full year guidance. Some bullishness right now in the aviation sector. We talked about it from the airlines perspective with UAL and DAL, but also, of course, the companies making the parts doing well, too.
Fun little fact, too, with all the M&A going on.
Yeah.
GE Aerospace in that BN Spin Index is one of the best performers also.
Oh,
so
spin-off companies. Oh, yeah.
Totally. It's an event-driven stock, and we know this is a market that likes events. And speaking of them, Uber and Lucid, they're teaming up on robo-taxis. Lucid is absolutely absolutely soaring this morning, Romaine, up almost 45% pre-market, but they have a stock split coming as well. We're going to give you more on exactly what's going on next. Stick with us. This is Bloomberg Open Interest.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
From our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
And now to high interest, a look at what's making headlines around the world. Drug makers Bristol Myers Squibb and Pfizer announced that they will start selling their popular blood thinner, Waitlist, directly to patients at a 40% discount. President Trump has repeatedly called on drug makers to lower prices. In May, the president signed an executive order tying U.S. drug prices to the lowest prices in other developed countries. So a little bit of movement in the stocks there, not by as much as you're seeing elsewhere. PepsiCo, we're going to talk about them too, beating estimates in the latest quarter thanks to strong international growth. The soda and snacks maker is trying to appeal to more health and budget-conscious customers. It is removing synthetic dyes from some of its products and plans to expand the use of avocado and olive oil across some brands. Pepsi now up 5.6% pre-market. And Coca-Cola. President Trump says Coca-Cola will start using cane sugar in Coke beverages sold in the United States. Currently, the company uses high fructose corn syrup, a sweetener made from corn. At the same time, shares of corn syrup maker Archer Daniels Midland are falling in the pre-market trading on that news. A lot of interesting tariff stuff going on. Romaine, you might know already, Pepsi a little bit more weighted to those international inputs. People were worried about it with tariffs relative to Coca-Cola, so people are watching the pair trade.
Yeah, definitely something that could really move the market. Of course, one of the more notable decliners there, but one of the most notable gainers in the pre-market space, that belongs to Lucid. The share is up more than 40%. This after Uber said it's teaming up with the company. Self-driving tech startup Neuro to launch an autonomous fleet. Mandeep Singh joins us right now, global head of tech research over at Bloomberg Intelligence. All right, Mandeep, Uber has, of course, been trying to push into the automated game, autonomous game here. What does a partnership with Lucid, basically buying several of these Lucid vehicles, and this partnership with Neuro, what does that look like when it all comes together?
Well, they had to make a buy versus build decision, and in this case, even though it's not an outright M&A, getting a 5% stake in both companies, probably that's based on our numbers. They haven't disclosed the exact state, but it tells you they want to develop their stack. Like Tesla has, it manufactures a vehicle, it has a self-driving software, it actually wants to have a marketplace for, the autonomous rides. In the case of Uber, even though they have partnered with Waymo in 2 cities, they haven't really got that distribution when it comes to AVs. And Nuro has specialized on their delivery side. They're not really a autonomous ride sharing.
So Nuro's doing the software pretty much, right? And they're the ones when I see those little robot things that delivering food like through California. That's Nuro, more or less, right?
And they have 1 million miles. In the case of AVs, the biggest thing that convinces the regulators you have the right technology is how many miles you have driven. They want that validation. So Waymo has done approximately 100 million miles till now. Nuro has done about 1 million miles. And look, there aren't many companies to pick from when it comes to, who can you partner with or who can you acquire. I mean, Cruise, we know they closed their operations. They tried to build autonomous technology. So a lot of the companies have given up in terms of developing technology, and Nuro is a good choice.
I also want to point out here that Lucid is looking to a 1-for-10 reverse stock split. This is really important. A lot of the big reason behind the move this morning as well in Lucid, and it raises the question for me, at least from Uber's perspective, why is it Lucid that they're the ones that are working with right now?
Well, so think about how many EV players are there, when it comes to having mass manufacturing. And even though Lucid does about 10,000 vehicles compared to, Tesla's 1.8 million units a year, so still small. Then you've got Rivian, which I think has partnered with Amazon. So from that perspective, again, you have to pick from, the options available. And in this case, Uber wanted some EV exposure. And, Lucid definitely has premium segment cars that a lot of people like, so it makes sense.
There is a question, though, about Lucid. And I know you don't necessarily cover automakers, but, this was a company that was struggling. And, I mean, you see that obviously reflected in this reverse stock split, the need for it. How reliable of a partner do you think Lucid can be in terms of delivering these vehicles, and I would presume maintaining them?
And is this exclusive?
Yeah. Well, I mean, look, the biggest problem that Lucid has had is the manufacturing costs. Compared to Tesla, which is able to manufacture a car in $35,000, $40,000, Lucid is more, premium, almost double the cost. So now you add more sensor costs for autonomous driving, the cost of vehicle goes over $150,000. So how do you bring the overall cost of autonomous vehicles down so that you can compete with the likes of Waymo and Tesla that are also trying to bring their costs down for mass adoption? So in this case, really, the more partners are there, the more streamlined you try to do in terms of, the cost per vehicle. And then you have Uber's distribution network where all these vehicles can,
replace their driver.
That's right.
And then who am I going to talk to in the morning?
Well, I mean,
that's where I get all my stock tips for the
just in terms of numbers, Uber does about almost 10 billion rides a year. AV rides are still less than 15 million. So that's the magnitude we are talking about. I don't think you will be able to replace the, the human driver fleet anytime soon.
I like you guys.
I have a lot of good podcasts for you, Romain. Don't worry about your morning drive in. I've got you.
Well, shout out to Julio. I seem to get him like every other morning or something. I think he just hangs out and waits for me now.
Mandeep, we thank you so very much for joining us here on set. That is Mandeep Singh of Bloomberg Intelligence. A lot going on in the technology world. Earnings season is underway, though, and so is the tariff countdown. 2 weeks until that August 1st deadline, and we're going to be joined by Mona Mahajan of Edward Jones, who's going to talk about positioning next. This is Bloomberg Open Interest.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Earnings revision breadth is explosive. And so you just can't deny that. You can't deny the fact that companies are good at mitigating tariffs, for example. Import prices really aren't up that much. So the question is, who's eating these tariffs? That's the big question I hear now from clients. Like, well, we're collecting all these tariffs, but where are they? Some of them are on the balance sheets of companies. It hasn't flowed through the cost of goods sold yet. Some of them are from exporters. They've discounted their pricing. They're eating the tariffs. And then some of it's going to get passed on to the consumer.
Morgan Stanley's Mike Wilson on Bloomberg Surveillance. Joining us now to discuss is Edward Jones, Head of Investment Strategy, Mona Mahajan. And the economic data has been pretty stunning. If you look at it this morning alone, retail sales holding up, pretty broadly based hold up there. You also see jobless claims coming in lower than expected. With the economy as strong as it seemingly is, do you have worries that there are perhaps tariff pressures that are still under the surface that have not shown their face yet?
Yeah, it's a great point, Shana. And look, I think the spirit of resilience in this market has been quite remarkable. And to your point, that's underpinned by solid economic data, whether it's the inflation data that remains contained, earnings growth that looks on track to likely exceed expectations, or the retail sales this morning, which still shows a consumer that is hanging in there. Now, the uncertainty around tariffs still remains. We're all still wait-and-see mode in terms of what the tariff rates will look like, and ultimately how they show up in the economy, whether it's through inflation or lower margins for corporations. But on the other hand, we are seeing some signs that perhaps we're getting some better data around tariffs as well, or at least some loosening around tariffs. For example, NVIDIA being able to ship some chips to China now. So perhaps some of those non-tariff barriers will come down as a result of these negotiations as well. And I think that is supporting the market, certainly supporting the technology side of the trade as well.
As sort of people really do look through this idea, Mona, of where the tariff impact is, or at least where it will be, does it matter what the aggregate level is, or is it really more about this idea of uncertainty and the idea that as long as there's stability, as long as there's clarity, the numbers themselves aren't as important?
Yeah, it's a great call out. Look, American corporations are notoriously great at navigating through uncertainty and adjusting to the backdrop that they're given. So once they are given the backdrop around here are the tariff rates, here are the rules of the road, corporations can adjust. And whether that means eating some of the tariff rates, whether that means passing some to consumers, we're already seeing some of that play out. Yes, inflation has risen, but not so much, pretty modestly thus far. And yes, some margin pressures in certain sectors have shown up, but really not to the extent that everyone feared earlier this year. So to your point, I do think once we have those rules of the road set, corporations will adjust.
All right, Mona sticking with us, Mona Mahajan sticking with us here as we continue to count you down to those opening bells. Shanali, a mixed bag when it comes to futures right now. It looks like markets are going to try to open to the upside on the back of some encouraging economic data.
But losing a little steam. We'll see where we open. We are right ahead against the opening bell. Stick with us for that.
A cidade estava sitiada.
Nisso eu começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
And we are just moments away from the start of trading. This is Bloomberg Open Interest, and I'm Shanali Basak. We've been watching futures really lose some steam heading into this opening bell, but we are trying to get that green back on the screen with the futures up even more for the tech companies than they are for the broader S&P 500 index here. Of course, some promising news coming out of TSMC, and we'll be talking a little bit more about exactly what those stocks are doing headed into the market open. Let's take a look at the opening bells. Very interesting movement, one for the adults and one for the kids here. We have Lisa Hochstein opening the NASDAQ this morning. That's Real Housewives of Miami. She does own her own app as well. Call her a technology entrepreneur. If you are looking for a divorce, she is AI powering you. But over here, we have Bob Iger opening the New York Stock Exchange over in Disneyland. It is the 70th anniversary there. And of course, a lot of people paying attention to live events right now, as well as what you're seeing in the online streaming world that you're going to be talking about later today. Remember?
Yeah, we got Netflix earnings coming after the bell tonight, so we'll be talking about that, as well as some of the push into theme parks for Netflix, a la Walt Disney. But let's talk chip stocks. A modest bid coming into the open here, pushing NVIDIA higher, ARM higher, and quite a few other names, and that's largely because of Taiwan Semi, a big bump to start the day, up about 4%. This after the company hiked its annual outlook on strong AI demand. And all of this comes just one day after one of its key trading partners gave a somewhat dour forecast, saying it may not grow at all in 2026. So who do you listen to, Shonali? ASML or Taiwan Semi?
A lot of noise, but also some interesting movement over here in United Airlines as well. You're now seeing the stock up more than 4% at the market open. It's narrowing its profit range for the year, saying the outlook has become more predictable, but peers have been being dragged lower headed into the market open. I also want to point out, really interesting, just because we were talking about it before, Pepsi, the shares are rising in the biggest gain since April of 2020, Romaine. So fascinating earnings season.
Yeah, and absolutely. And this gets to the idea we were just talking about with Mona, the idea that everyone's looking for that tariff impact, that economic impact on these companies. And at least for right now, they seem to be finding a way to navigate.
Shrugging it off. We're going to bring now back Mona Mahajan, Edward Jones's head of investment strategy. Let's talk about earnings season, because you're looking at companies holding up better than expected. The reason Pepsi is so interesting from where we sit is because they were the ones people were relatively more worried about relative to their rival, given their international exposure. Is international exposure right now something that investors count as a bad thing, given where the dollar is, and given that maybe a little diversification is working out?
Yeah, look, international had a great run for the first few months of the year. In fact, it continues to hold up pretty well. The U.S. has probably played a little bit of catch up in recent weeks, but nonetheless, it's an environment where if we still have continued dollar softness, if we are still seeing central banks globally lower rates, it's still a positive setup, but we'd say probably less so than we saw earlier this year. We think that pace of outperformance will likely ease over time, and the U.S. will play some catch up as our central bank ultimately starts to cut rates and as our earnings growth continues to accelerate. We do think this year we're looking at single-digit earnings growth for 2025, S&P 500, but as we think about next year, we could see that reacceleration, particularly as interest rates may move lower, that fiscal stimulus from the tax bill may kick in, and we see corporations adjust to that tariff environment.
And as these corporations adjust to that tariff environment, Mona, do you have any concern that maybe certain pockets of this market may not adjust? I mean, we're still early in this earnings season. A lot of the companies first out the gate, of course, are probably a little bit more insulated from that tariff impact because of their size with regards to big tech or just their complexion of the businesses with regards to the banks. But what about the consumer companies? What about the apparel companies? What happens when we get there?
Yeah, look, a lot of those non-perishable goods that we talk about, electronics, consumers, clothing, toys, all of them are thinking about strategies right now. They may have started to build inventories already. And keep in mind that inventory builds could have happened even as we were at the 10% tariff rate, and they could have built through the Christmas season already. We've heard from some companies that in July, they're already thinking about Christmas. So prices from now until year end could remain relatively contained because we did see that nice inventory build. The other call out I'll just make, of course, is a broader point on the U.S. economy. We know it's a services-driven economy. 70% of GDP comes from services, and the goods, and especially those consumer goods, only make up about 11% of GDP. So even if we do see some inflationary impact, they're likely not to sway the overall basket. And even if you look at CPI, similar trends, services, shelter, rent, all moving in the right direction and make up over 60% of the basket. So it's something to keep in mind as we get through the year. We're really keeping an eye on how the services economy is doing just as much as how the goods economy is doing.
I also want to point out the role of technology in this industry, because you do have the Magnificent Seven really here posting a lot of bifurcation. You have NVIDIA just soaring this year, and Gina Martin-Adams over at Bloomberg Intelligence, her thought on this is that the Mag 7 is so last year. And she named about 27 global stocks that have better profitability, better earnings growth, and better valuations. And given what you're seeing around the push-pull with NVIDIA, China, what's happening with the Trump administration, the flipping of rhetoric so quickly, is the Mag 7 a reliable trade, given NVIDIA is holding it up so much?
Yeah, I think the Mag 7 may be adjusted over time, but the fundamental theme of AI, hyperscalers, data centers has really shown up this year. And in fact, there was a lot of uncertainty heading into, the beginning of this year after the tariff announcements were made, whether or not these companies would commit, reaffirm their CapEx spending plans. And in fact, all of them did across the board. And we are still seeing strong enthusiasm on not only the spending, but the potential for returns on AI. So certainly that theme has held up the market pretty well over the last several weeks as well. And we continue to see it being a theme, a secular theme over the next several years. Now, over time, we would expect the gains and the benefits in the markets to go beyond just the infrastructure players of AI, beyond the semiconductor type names, into some of those sectors that will experience the productivity gains. So think about financial services, healthcare, even infrastructure, manufacturing, robotics. All of those should benefit over time. So this theme of, yes, AI and tech should be a part of your portfolio, but keep it diversified and broad, we think still makes sense here.
I am curious, Mona, about some of the new entrants into public markets. We've seen a pickup in IPO activity. With regards to investor sentiment and their appetite for some of these new issues, and I know it'll vary depending on the types of companies coming to market, but do you think there is enough appetite and enough cash, for that matter, ready to be deployed to absorb that new issuance should that uptick continue?
Yeah, we remain hopeful that new issuance market will pick up, especially if we do continue to get this deregulation trend into the market. We think capital markets activity has been pretty subdued over the last several years, and there is this environment that was, a lot of folks beginning of the year very hopeful that we would see a meaningful pickup. We're starting to see that trend emerge. IPO activity, M&A activity, capital markets in general, we heard from the banks, is starting to show signs of life here. And we do think, if you think about, for example, over $7 trillion still in money market funds on the sidelines, there is cash that can be deployed, especially as rates move lower. Investors may start thinking about, what are our alternatives to these money market funds, and we could see that flow back into the market. So we think the setup is positive for pickup in capital markets activity here.
Mona Mahajan of Edward Jones, we thank you so very much for your time this morning. Of course, a choppy trade as we get underway in the trading day. We're going to look at the stock market right now and look at the biggest movers under the hood here. We were talking about Pepsi and just how well it's been faring. The stock is still down year to date, but it is your biggest mover on the upside this morning on the S&P 500. You're looking at Microsoft, Apple, NVIDIA trying to contribute as well. NVIDIA, though, has been fluctuating throughout the course of the morning. We'll see how much this sticks. On the downside, you do have Abbott Laboratories really leading your way down on the points decliners. You also have Elevance Health. Both of these are earnings stories here. Abbott lowered the top end of its full year guidance, where Elevance had cut its guidance. But big tech is mixed. Let's look at sectors here to get a better look at what's happening across industry groups, because healthcare, as we've been talking about, earnings story here, down more than 0.6%, drag a little bit on the S&P 500 here. But consumer staples, your defensive trade still back on, plus a lot of news coming out with the likes of Coca-Cola and Pepsi, industrials, utilities, consumer discretionary, all higher, financials as well. Remember, yields have really cooled down a little bit from this morning's spike off the heels of hot economic data. But you can see, of course, Romaine, those retail-friendly industries holding on strong after those economic data points have come out this morning.
All right, when we come back, we're going to dive a little bit deeper into earnings season. In fact, one of the biggest movers in the S&P right now is United Airlines, a more predictable second half. That's what the CEO says. The discussion when we come back right here on Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
All right, let's get right to our top call. Some of the analyst action in focus this morning. First up, we'll take a look at Starbucks getting cut to underperform over at Jefferies. The analyst seeing too much froth in the stock price and says the coffee giant's complex issues, quotation marks, could take a little bit longer than expected to resolve, fractionally lower on the day. Meanwhile, to the upside is Stephen Madden getting upgraded today to a buy over at Citi. Citi saying that the company's margins are bottoming as fashion trends turn more favorable for the company's core business. Those shares having their best day since early May. And finally, CoreWeave, a new bear on the street. This over at HSBC, initiation of coverage of the cloud computing company with a reduced and a street low price target. HSBC saying the company's liquidity looks a little bit stretched. The shares down a little bit on the day. Shonali?
And let's get a check on United because the airline had narrowed its profit range for the year, saying that the outlook has become more predictable than in the first 6 months of this year. CEO Scott Kirby spoke to Bloomberg in the last hour.
It's been a good year. I mean, it's actually pretty remarkable that we've grown earnings and margins for the first half of the year despite everything that's happened. But a lot has happened this year. And we like to have a policy of being conservative on our guidance because stuff does happen. And we want to be able to absorb some unexpected events in our guidance. So we intentionally build it conservatively.
Joining us now, Bloomberg Boston Bureau Chief and the writer of Industrial Strength, the newsletter. You have to catch it, of course. That is Brooks Sutherland. You know, you do still have United Airlines, even with today's jump, down about 4% this year. And I still think that speaks to how these airlines so far are saying things are getting more clear, but they're not bouncing back in this massive way. So what uncertainty is there still remaining through the remainder of this year and into 2026, where most investors are looking right now?
Sure. I mean, I think one of the things that's interesting that we've heard from both United and from Delta is there's really sort of this K-shaped recovery in the traveling public, that they are seeing a rebound in demand from that business flyer, from that premium traveler who's willing to pay up a bit more for their seats. You're not seeing the same kind of recovery at the lower end of the spectrum, the people buying those basic economy tickets. And I think that raises questions about what we might see from some of the other airlines that aren't as diversified as Delta and United in international markets and premium flying. And if we could continue to see pain points there that signal more of a strain on the consumer at the lower end of the income spectrum. You're also still seeing the domestic airline industry in general really struggling with too much capacity. They're all taking steps to try to rein this in, try to put more of a floor on profitability, but you are continuing to see that take a toll, and some struggling in terms of being able to see that pricing power come back for these airlines.
I am curious about the disruptions that we saw earlier this year at the airport in New Jersey, Newark, New Jersey. They obviously did have an impact on the bottom line in the most recent quarter. But was there any real staying power to that? Because there was some concern that people would look at this and not necessarily blame the airport or the FAA, that they would somehow take out all of their concerns on United itself.
There was, and United would say that this is not going to stick around and that they're going to be able to move past this. I think it's a little bit too early to tell. You're right that it did take a toll in the quarter. I think there is a lot of news these days, and a lot of news to keep people occupied, and that may end up working in United's favor in terms of moving on from this.
I also, Brooke, want to take a look here at General Electric. Of course, the aerospace industry right now seeing some really interesting moves, but GE has been soaring this year, up well over 55% on the year. One of the best performers when you look at the companies that have spun off from other companies. Larry Culp saying in an interview with Bloomberg, "I do think the administration is listening." And this is important, of course, because GE Aerospace was able to restart shipments of engines for a Chinese plane maker. When you think about the relationship to the administration, how important is it to a company like GE right now? And do they suffer from any future uncertainty too?
It's very important. I mean, what you've seen the Trump administration do is really upend an agreement that's held for decades that's allowed the aerospace supply chain to operate essentially tariff-free, and he has put real kinks in that. And so you've seen, Larry Culp at GE, but a number of other aerospace executives trying to implore the administration to lift those tariffs and to understand the importance of keeping that supply chain flowing. If you look at some of the trade deals that the Trump administration has announced, Boeing airplanes tend to play a very prominent role in those deals. They are very high-value goods. They're, one of the most valuable U.S. exports. And so I think, to see that on the one end and then also see tariffs on the aerospace supply chain on the other end does create a conflict. And I think that's the message that Larry Culp is talking about. That's the message that they're trying to get across. Now, we haven't yet seen, a relief overall in terms of tariffs on the aerospace supply chain. And so I would think that this is the kind of thing that aerospace executives are very much still in conversation with the Trump administration on and trying to get a formal resolution.
All right, Brooke Sutherland, Boston Bureau Chief. How are those bike lanes coming, by the way? Have you guys finally sorted that out? Yeah.
No, it's a big battle here over the bike lanes, and you got a lot of heated interest in terms of the bike lane constructions. It's even an issue in the mayoral race, so stay tuned for that.
Yeah, don't worry. New Yorkers threw a tantrum over it as well, and then eventually they got over it. Brooke Sutherland there, of course, covers all things aerospace for us. When we come back, we're going to focus in on Netflix. They're expected to report earnings after the bell tonight, and they're expected to report record profits. But a big question about their valuations and whether a $250 billion rally has been justified. This is Bloomberg Open Interest.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace Zahran, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Welcome back to Open Interest, the second day of gains for the S&P 500 as it tries to stretch out to yet another record high, 6280 and change as we all stand right now. And keep an eye on the NASDAQ 100, potentially closing out at another record high itself. Modest moves right now in the Treasury space and more pronounced moves when it comes to the dollar. And that really is the setup, quite frankly, for the broader earnings picture as we move deeper into the session. Take a look at some of the names behind me. I'm going to look over my left shoulder here for a better look here. As right now we keep an eye on big names like NVIDIA and Taiwan Semiconductor, with TSM, of course, out this morning with a relatively bullish commentary about demand holding up. CSX in play today, as is Norfolk Southern. In fact, two of the big movers on the day on the back of speculation that Union Pacific might actually be interested in buying one of its rivals. A report by Semaphore that did not name the target, but seeing big activity in CSX as well as Norfolk Southern. It's a big part of the reason, along with UAL, why you're seeing Dow Transports lead the charge among the major indices and averages out there. But once we get to the closing bell later tonight, it's going to be all about what's going on in Hollywood and in the entertainment space. Netflix set to report earnings after a phenomenal run in that stock since its last earnings report. A big focus, though, Shonali, this time not on subscriber growth, but on advertising dollars and, of course, on their margins.
Yeah, looking forward to dig into Netflix right now after the run-up that we've seen. We're going to bring in now Geeta Ranganathan, media analyst for Bloomberg Intelligence. It's funny, when I talk to folks just anecdotally, they say that they don't have a whole lot of time to watch TV now. But right now, if you are watching, the slate that Netflix has had of late is pretty stellar. There's a lot of new shows out there. What does this mean for the ability to bring more subscribers on, especially at a time where the insight into subscriber growth gets a lot muddier for investors?
Yeah, absolutely, Shonali. So I think, they've had a very good slate. As you said, they've broadened their content strategy a lot. So it's not just, dramas. They have live content right now. They have unscripted content. So everything is really working. And you talk about, the first half content slate. Just wait till you get into the second half. We already kind of kicked that off with Squid Game, the final season. And then you really have what management itself kind of characterizes as an embarrassment of riches. So they have literally the three biggest shows ever in their history in this 6-month period. You had Squid Game, you're going to have 2 parts of Stranger Things, and then you're going to have Wednesday. And it's not just that, you're going to have some NFL games, you're going to have movies like Happy Gilmore, Knives Out. So it's really a monster slate, and that is absolutely going to drive subscriber growth as well as their ability, their pricing power, so their ability to take hikes in their prices.
How far do you think they can go with those price hikes? And particularly, Geeta, on the ad tier. I understand why you would raise the price on the non-ad tier, which quite frankly still has an ad, by the way. But I am curious, for those folks who are subscribed to the ad tier, when they see that price go up to $6.99 to $7.99 and maybe even beyond that, at what point does it stop being a value proposition for the customer?
Romaine, Netflix is still by far the most compelling value proposition. I think they've proven that just with kind of the breadth and the depth of the content that they offer, and they're adding more and more to this. And what really the ad tier helps them do is, be able to take up those price increases on the non-ad tier. So they increase prices by 16%. It's right now about, $18 per month. I think they still have quite a bit of runway. Just if you look at U.S. prices itself, they can take this up to $20, $25 per month. And I don't think people are going to bat an eyelid.
Okay.
I told you, the content slate's pretty good.
Yes.
Geeta, really quickly here. I mean, this is still a stock that has run up by more than 40% this year. How high is the bar for earnings? Even if they do a good job, would it be good enough given where they're trading?
Yeah, you're absolutely right, Shonali. It is kind of priced to perfection at this point, and a lot of those growth catalysts, I think, have been factored into the stock price. But really, I think when you go into the 2Q earnings report, what investors are going to be super focused on is, are they going to raise guidance? So right now, their full-year revenue guidance is for about 13% growth. If they can raise that to, let's say, even 14%, 15%, I think that's a big win. The other big number to look for, operating margin targets. 29% is the number that they've guided to for this year, but if they take that anywhere above 30%, I think, again, that's going to be a big positive catalyst. So really the focus here, broadening out to the financial metrics and to the strategic direction.
Geetha, we thank you so very much for joining us today. That is Geetha Ranganathan of Bloomberg Intelligence. Looking forward to the close today.
Stranger Things. Like, I remember when those kids, like, they were nice and cute and it was fun. Like, aren't they all, like, 40 years old now? Like,
You
what are
can
we
just
watching?
switch to Wednesday, right?
Oh, okay.
I mean, coming up in the next hour, we're going to get out of the entertainment zone and we're going to get into the serious business of Washington and policymaking. Rebecca Patterson is joining us next. Worried about inflation if Trump were to fire Powell. Stick with us. This is Open Interest.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Fresh economic data is buoying the markets. On news from the Commerce Department, retail sales were up last month. 0.6%. That's despite fears over inflation and President Trump's tariffs. The specifics from CBS News business analyst Jill Schlesinger.
Motor vehicles and parts sales increased by 1.2% over the course of the month, and excluding autos, sales were up by 0.5% month over month. Building material and food service retail spending both rebounded, perhaps showing that the drop in May sales were due to unseasonable weather in the eastern side of the country.
The Dow is up 135 points right now. Senate Republicans have pushed through President Trump's plan to cut $9 billion from the federal budget by clawing back foreign aid and funding for public broadcasting. NPR CEO Catherine Maher.
This could fundamentally alter public radio as a national service in this country, and that would be a tremendous tragedy.
The House has to pass the legislation by tomorrow or the funding will be released. CBS News confirms the Justice Department has fired federal prosecutor Maureen Comey. Name sound familiar? Here's CBS's Scott McFarland.
She is the daughter of former FBI Director James Comey, and she handled, in part, the Sean Diddy Combs case and the Jeffrey Epstein case. The Department of Justice would not comment on why Comey was fired. We do know that she was fired under the presidential authority, which means it was done under the president's name.
They're lowering the voting age in the UK. CBS's Vicky Barker has details from London.
16 and 17-year-olds can already vote in semi-autonomous Scotland and Wales. Now, Prime Minister Keir Starmer's government says it's extending the franchise to their Welsh and English counterparts, too. That's keeping a campaign promise made by Starmer's Labour Party.
A pop star of the 1950s and 60s has died. Her publicist confirms Connie Francis has died after she was hospitalized in Florida earlier this month for severe pain. Francis' heyday faded after the 60s, but she continued to record and perform. This song recently went viral on TikTok, introducing her to a new generation of fans.
Pretty little baby,
Connie Francis experienced more than her fair share of tragedy. She was sexually assaulted and robbed at knife point in 1974, then sued the hotel chain where the attack occurred. Born Conchetta Rosa Maria Franconero in Newark, New Jersey, Connie Francis was 87 years old. This is CBS News. Disneyland opened 70 years ago today.
The opening day on July 17, 1955 was covered on black and white TV.
As you go on through that tunnel past the Disneyland Santa Fe.
The price to get in back then, $1, then 10 to 30 cents a ride.
Here is one of the most famous motion picture theaters in the world that'll be here at Disneyland.
And even Walt Disney himself was a part of the opening day.
Before you enter this realm, I'd like to read this dedication.
The California Park's opening day gala drew a crowd of more than 11,000 invited guests. Plus, of course,
the real star of it is Mickey and Minnie Mouse.
Matt Piper, CBS News.
The man behind the hit musical won't let the opportunity slip by. Lin-Manuel Miranda says he'll use the show's 10th anniversary performance August 6th on Broadway as a fundraiser for a coalition of nonprofits that provide immigration services. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube. That's the internet, kids. Head over to youtube.com and search Bloomberg Live Radio, and that's where you will find us. Coming up, Michael McKee, Bloomberg International Economics and Policy Correspondent. We'll get his thoughts on some of this economic data, as well as who's going to be our Federal Reserve Chairman going forward. Dan Genter, President, CEO, and Chief Investment Officer of RNC Genter Capital. Get his thoughts on these markets. George Ferguson, Bloomberg Intelligence Senior Aerospace and Airlines Analyst. Talk to us about United Airlines. They took their guidance a little bit disappointing here, and we'll talk to him about that. We talked about GE Aerospace, which raised its guidance on the aviation business. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst on the latest tech news. I'm not sure what's going on with President Trump and NVIDIA and chips. We'll get the latest from Mandeep Singh. But right now, let's go to Charlie Pellet for a Bloomberg Business Flash.
I thank you very much, Paul Sweeney. The Dow, the S&P, NASDAQ, they are all advancing. Right now, we got the S&P gaining 16 points, 62.80 where we stand, up by about 0.3%. Dow Industrials up 137, now up 0.3%. And the NASDAQ Composite Index up 90. That is a gain of 0.4%. Your 10-year, 4.43%, with a 2-year, 3.89%. Gold down $25 the ounce, down 0.8%. And West Texas Intermediate crude up now by 0.3%, 66.57 a barrel. Bitcoin down 1.3% at $118,390 on Bitcoin. Stocks higher after that better than estimated retail sales report, and a drop in jobless claims pointed to economic resilience. We got our Michael McKee standing by. He'll have more on the day's economic data. So again, stocks moving higher. United Airlines up now by 3.3%. Part of a broader advance in the group. United says the second half of the year has become more predictable, and it is suggesting it may be able to beat its earnings targets after customers return to booking flights. CEO Scott Kirby was interviewed this morning on Bloomberg Radio.
We are encouraged by the environment. In fact, just in the last couple of weeks, for us at least, the yields have turned positive on domestic. They've been down, for several months as we started the year, but yields have now turned positive for forward bookings at least.
United's Scott Kirby interviewed on Bloomberg Radio. So UAL up now by 3.4% among rivals. Delta up 2.2%. American Airlines up by just about 3.4%. Bottom line here, stocks higher. S&P up 0.3%. The 10-year 4.43%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie Pellet. Thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. As Charlie was just reporting, we got stocks. We got in the green here today, up about 0.4%. Let's take a look at some stocks that are on the move today. I'm Paul Sweeney, Lisa Mateo, and we're joined by Bloomberg's Denitza Zakova. What do you got for us, Denitza?
Let's start with the robotaxi competition, which is heating up. We just had Waymo starting to run in New York, but today we're having...
in New York?
Yes. Didn't you see the photos? It's on Twitter.
Okay, all right. I'll check it out. All right.
Here we go.
God forbid I missed something.
I didn't hear that either. Oh my gosh. Anyway, let's start with Uber. It's teaming up with electric vehicle maker Lucid Group and tech driving startup Nuro to launch a robotaxi fleet. The reaction on Uber is actually muted. The stock was down, but Lucid, it surged 62% initially in pre-market trading. Now it's about 30%, but obviously incredible gain. Of course, this is a much smaller company compared to Uber, but still the price reaction is really impressive. Uber announced Thursday it will purchase and operate Lucid SUVs outfitted with the NeuroDriver technology. They'll be part of their ride-sharing network. We're talking about at least 20,000 vehicles over 6 years. They're expecting to see them in unidentified U.S. cities in 2026. So clearly the goals are moving fast.
Okay.
Like we're talking about very recent moves. Lucid is actually up 2% year to date, so today move is still not bringing that much, the stock much higher. The ticker is LCID.
I don't still know. I'm not sold on the robotaxis.
You're jumping in one, I know.
I know. One day. About this time, Paul, I get up at 2:30 in the morning, right, for work. What? So about this time is like a Starbucks run because you need that little extra boost. But their shares not doing so well, Denitza. What's going on?
For sure, Starbucks has had a rough ride, and today they're having a downgrade by Jefferies. They said Starbucks has run too far. They says the brokerage has put underperform since its last quarterly earnings. Starbucks share price has outperformed the S&P rally, and to Jefferies, that really isn't warranted. They see the stock running way ahead of expectations. One reason we've seen some rally there is their 10 billion price tag that is attached to their China operations, which they're in the process of selling. But for Jefferies, this is way too ambitious given the assessment of their current operating business. So clearly some negativism there. They also look at same-store sales down 3% in the third quarter. So that's another reason they're not so bullish on the stock. Starbucks is flat year to date, but today definitely we're seeing more pressure. The stock fell as much as 2% now. It pared back some of those losses.
All right, one more. What do you got for us?
We have Steve Madden. It's a famous shoe retailer, and I love the ticker. It's SHOO, and it's up 6% ahead of the. It was up 6%. It's coming off a city upgrade from neutral to buy, saying the footwear maker margins are bottoming as fashion trends are turning more favorable. The stock was actually down. Is now down 40% year to date. So this is much needed bullish upgrade from analysts. It has 4 buys, 6 holds, and 0 sells. But clearly now we're seeing some optimism there. They see second quarter EPS will mark the low point for shoes margin as they navigate significant tariff pressure this year. But from here onwards, they're seeing a lot of optimism. So many moving pieces. They believe the market is underappreciating their acquisition of KG and seeing upside from here.
Very good. All right, Denitza Sakova, thank you so much. We appreciate that. Cross-asset reporter for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Pod reports. Listen for 5-minute audio reports on the biggest winners and losers in the market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you get you listen. All right, let's check in with the global trade policy, tariffs, all that kind of stuff. It is a fluid situation. It is a daily need to check in. Brendan Murray, Bloomberg Global Trade Editor, joins us here. Brendan, what's the latest on the tariff policy coming out of this White House?
Well, it seemed to be going down 2 tracks. Basically, the president is saying, for all those countries that aren't negotiating with me, I'm just going to send them one of these letters and tell them what their tariff rate's going to be. He said it was going to be something like 15% or so, which is higher than the current base rate of 10%. But he's also engaged in pretty advanced negotiations with countries, including India. We hear that Taiwan is there's also a deal pending with Taiwan, and there's also one with Switzerland. And the real big prize would be to get one with the European Union. The European Union is the U.S.'s largest trading partner when you combine all 27 countries, and that one has a lot of contentious issues that have yet to be debated. But within the next 2.5 weeks until this August 1st deadline, we would expect some of those to come together. But as I said, some countries are just going to get their tariff number handed to them.
So he sent out letters to more than 150 countries, notifying their tariff rates could be between 10 and 15%. Is this good news or bad news? How do you take it?
Well, I don't think it's these countries would say it's good news that their products are being hit with 10% to 15% tariffs, but it could be worse.
Correct.
Is probably how a lot of them are thinking. Anything close to 10 or 15% is probably a relief. Companies can more or less adjust to that sort of level, but when you get up, in excess of 30 or 40%, then you're talking about basically cutting off trade with the U.S. if tariffs such as that were imposed. So 10 to 15% looks like sort of where we're headed. Indonesia just cut a deal for 19%, which was down from its 32%. So it's probably breathing a bit of a sigh of relief. Other countries in South Asia are probably hoping that's now the standard that we should be shooting for, anything 19 or 20% or less. So we're seeing more of these numbers come out, but the pattern has yet to be established.
Red headline crossing the Bloomberg terminal. The FDA authorizes Juul e-cigarettes to remain on U.S. markets. That's according to the Wall Street Journal. We'll have more reporting on that. Hey, Brendan, August 1st, that seems to be a deadline for tariff implementation. Do we have a sense of how hard that date is?
Well, we've heard the president say that this is the date you're going to start paying the tariffs, but he's laid down that red line before and pushed deadlines back. So you can take it for what it's worth. He says that's the date, but he has a record of being more flexible when it comes to deals that aren't quite there, that may need a little bit more time. A good example of that is the other big deadline in August. The August 12th deadline which marks the end of the U.S.-China tariff truce that's currently underway. That 90-day truce expires on August 12th, and Treasury Secretary Scott Bessent has told Bloomberg Television recently that I wouldn't worry about August 12th, which is basically a signal that that's going to be pushed back for, who knows, sources tell us could be another 3 months.
Hey, Brett, the last 35 seconds or so we have left. The president's been talking about these tariff letters. You mentioned it. But he's been talking about them as quote-unquote deals. They're not deals, correct? I mean, there's only been kind of one deal so far. Was that Indonesia?
Well, he's got this sort of maximum leverage approach, and that involves the sort of harsh rhetoric of here's the deal, unless you can come up with something better. So they're not deals. If you're on the receiving end of them, they're punitive and they will hurt your economy. So that is basically the negotiating tact that the president is using to say, here's your deal, here's your deadline. Yep. You better come to me with some concessions, otherwise this is what you're going to get.
Okay, that's kind of the world we're living in at the moment, and presumably our trading partners recognize that and will deal accordingly. Brendan Murray, he's a global trade editor for Bloomberg News, joining us from our London headquarters. We've got green on the screen across the board here on this Thursday. S&P is up 16 points. That's 0.25%. The Nasdaq's up 84 points. That's 0.4%. We'll have more coming up. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. An update for the Dow, the S&P, and NASDAQ. We're looking at a solid advance after retail sales and jobless claims data this morning. S&P right now up 12 to 62.75, gain there of 0.2%. The Dow up 119, up 0.3. NASDAQ up 70. That is a gain of 0.3%. Our Mag 7 index higher, little change, but up less than 0.1%. The 10-year 4.44%, the 2-year 3.90%, and the 30-year 4.99%. Gold down 0.6%, 33.27 the ounce. West Texas Intermediate crude up 0.5, 66.73 a barrel, and Bitcoin now down 1.1%, 118,600 on Bitcoin. Earnings news. PepsiCo maintaining its annual outlook and reported sales growth that beat Wall Street estimates. PepsiCo shares are up by 6.4%. Rival Coca-Cola up 0.7%. President Trump, meanwhile, saying in that Truth Social post that Coca-Cola has agreed to use cane sugar in Coke beverages sold in the U.S. Coca-Cola followed up with a statement saying it appreciates President Trump's enthusiasm and will be sharing more details on new offerings soon. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I was going to ask you if you're a Coke versus Pepsi person, but that just doesn't work.
No,
with you,
it
does
doesn't. Water. That's where we go.
I mean, I'm a Coke person. As a kid say, I identify as a Coke person. You put a Pepsi in front of me, I'll be just as happy.
You can tell the difference? No.
I don't know. Not really. I could care less. It's all good to me. But all right, let's be honest. This is just me editorializing. Worst job in the world, economist.
Oh.
But somehow Michael McKee has made it into a great gig. And Michael McKee is the international economics and policy correspondent for Bloomberg News. He's out there in Victor, Idaho, which is probably, all in all, you probably wouldn't necessarily put that on the top of your list. But this time of year, it is beautiful place of the world to be. And he's out there at the Rocky Mountain Economic Summit. Michael, thanks so much for joining us here. Hey, Mike, we haven't spoken since we had President Trump weighing in on who should not be the Federal Reserve Chairman. What's the feeling out there at the Rocky Mountain Economic Summit about, I guess, all this discussion about our Federal Reserve and its chairman?
Well, certainly the professional economists and investors out here don't think that this is good for the Fed or good for the economy to have this kind of thing going back and forth. And the president's comments certainly aren't helpful. We saw that market reaction yesterday morning when those headlines came out about possibly replacing Powell, trying to fire him at least yesterday. And so they kind of wish the president would shut up about this and just wait out Powell's term. But there's a division among investors and economists about how likely it is or how it should be for them to be cutting rates anytime soon. Obviously, the people who invest would like lower rates. The economists are saying, well, the Fed has a case to wait. So there's no real consensus on it. And there's no real consensus on who they think will be the Fed chair. Names rise and fall based on the latest headlines. So everybody is quite interested in what's going to happen next.
So if this were to happen, what would this do for the perception of the U.S. economy?
Well, if he were to try to fire Powell, and I have to phrase it that way because he can't, legally in theory, he can't fire Powell from his job as a member of the Board of Governors unless there's cause. And most people don't think this whole thing about the remodeling of the Fed headquarters is sufficient for cause. Jay Powell has said he's going to sue. The Fed will sue to keep him in position. So what it would end up doing is dragging things out for months because we see how slowly the courts work on all of this. And Powell only has months left. So is it really worth it to the president to risk the market reaction and not maybe have a decision for quite some time? That's the gut feeling of people, that the president is, as Scott Besson said on our air yesterday, that they are working the refs, trying to get in the head of the Fed and get them to do something. It's not going to work. But firing Powell's not going to get the president what he wants either. It's not going to get him to cut interest rates.
Hey, Mike, out there at the Rocky Mountain Economic Summit, which is a phenomenal scenario. I wish I'd gotten that ticket. What are the folks talking out there? What are the folks talking about at this summit?
Well, after this week, there's been a lot of talk this morning at breakfast and such about how the economy is not showing real, or at least bad, signs of tariff bleed through into consumer performance or inflation. You look under the hood and you do see it in areas that have been tariffed, but there's a lot of caution because everybody knows the tariffs, the real tariffs haven't gone on yet. The president continues to extend that. We have to wait till August 1st and see how that affects the prices of goods. And so nobody is celebrating the fact that these numbers are good. They're happy the economy is still hanging in there, but they're all kind of on edge. And I think that's what we see from businesses around the country. It's what Fed officials say they're hearing. Nobody wants to really make any moves until they know what's going to happen. In the meantime, prices haven't gone up that much, so consumers keep spending.
All right. Michael McKee, thank you so much. We appreciate it. Get back out there to the fly fishing. Michael McKee, International Economics and Policy Correspondent, Bloomberg News. Victor, Idaho. If you're going to Victor, Idaho, I'm going to the Knotty Pine Bar and Restaurant.
What's there?
It's got some good barbecue, some good steaks, some good bison. I'm sure Mike McKee's been there already.
He's on it. He's
on top of it. So anyway, he's there. All right, let's get back to these markets here. We got a little bit of green on the screen. We kind of gave up some of the gains from earlier this morning. Let's talk to somebody who does this stuff for a living. Dan Genter, President, CEO, and Chief Investment Officer at RNC Genter Capital Management, joining us here in our Bloomberg Interactive Broker Studio. Dan, thanks so much for joining us.
Great to be with you.
We were down 20% earlier this year. We've come back and we've retraced all of those losses. Now we're actually, the S&P's up 5 or 6% for the year. What are you telling your clients for the back half of the year?
Well, look, I think that, we have more of a tailwind now than a headwind. And I think that's the most important thing, is that when you look at the economy is at least sanguine and actually is moving in the right direction. Inflation is trending down. We have 2 potential Fed rate cuts that are sitting on the horizon, and you've got strong earnings, with a stable environment. So we're not quite as optimistic as the street. We think that we'll see earnings this year that will actually be up about 9%, and then next year about 6%. But, there's really nothing that should cause a significant PE multiple compression. So if you can continue to carry 21 from here and even track earnings, we're still looking at a 7-8% environment with probably a 2% dividend. So you're looking at 10% total return. And so it's, it's no time to be sitting on the sidelines, because there's not really a recession in sight at the moment.
Now, you mentioned the Fed, but also economic data. We had the CPI report, it was a little bit softer. You had the PPI report, little change. Retail sales, stronger than expected. So where do you put kind of the state of the consumer? What are you hearing from the markets?
Well, what we're seeing is that the numbers that really always drive that are employment. And the fact of the matter is we're at full employment. We're seeing some modest increases in hourly wages and also total compensation. And so the consumer that is not necessarily exuberant anymore, but they still feel pretty flush. Frankly, maybe they feel a little more flush than they really are, but that's gonna cause them to spend. And you're seeing actually some better trends with regards to credit. You're still seeing credit card delinquencies rise a little bit, but they're rising at a slower rate. So they're pulling in some of the spending. They're getting a little more conservative. And frankly, it's a little bit surprising of how strong they've been considering the level of interest rates that's having a profound effect on housing and large ticket purchases like autos. So the consumer, is still a driving force here for the, and as long as employment stays where it is, and it appears to be solid.
Fixed income, what are you doing in the world of fixed income these days? Are you going treasuries? Are you taking some credit risk? If so, how far down the credit quality chain are you looking at?
Well, we're definitely taking some credit risk, and we definitely have a bias towards credit, over and above treasuries. But the values are becoming harder and harder to find. I mean, you have an option adjusted spread right now, which is about 76. You know, if you look at averages, it's about 137. So clearly some of that's been compressed. You don't really have as much of a value. But again, once you're in an environment where you have solid earnings, and the earnings seem to be consistent, cash flow coverages are very, very good, you're not seeing a lot of downgrades. And so you might as well take the extra 3/4 of a point and run with that, especially on the short end of the curve. Now, the other area, which I think would be of interest to your listeners, that I think is a real opportunity, is in the municipal bond area. I mean, the municipal bonds. Hey, when you're at a 3.5% to 4%,
you're an LA guy, right?
We're an LA guy.
So you're tax sensitive, right?
We're extremely tax sensitive,
exactly.
and we become more tax sensitive every day.
Yep.
And so, you know, when you're at a 13.3% rate all in California, then obviously the munis become very attractive, as they are here in New York and really across the country. I mean, frankly, even for the people that are in states that have no state income tax, the relative value of munis is significantly over and above treasuries, even if you're in a 37% tax bracket. So, you know, like as I mentioned earlier, anytime you can get a 4% type handle on munis and you're 7.5%, 8% taxable equivalent, it should be part of your portfolio.
You're talking Paul's language.
Yes.
Right? So a lot of administration policy, right? Some changes. We've heard some companies being, you know, negatively affected. But what are some sectors that are positively affected by these changes?
Well, the financial sector is certainly going to be positively affected. I mean, if you look at it from the standpoint that they're doing very well in both their trading functions and they're doing very well in their net interest margins, because higher interest rates are good for them. But the biggest thing that's going to help them is lower regulation. And so the overall financial industry is going to be willing to take a little more risk, you know, just because regulation, overhead, expenses are likely to come in a little bit. So we think that's going to work very well. We think utilities, you know, clearly are going to be an area that's going to benefit. And the fact of the matter is you're seeing a real bid for healthcare right now, because I think overall people in the healthcare sector are saying that this administration may not be healthcare friendly, but it's not healthcare hostile. And so you're seeing some run up in that sector also.
You're a USC guy, right?
Right.
What conference are you guys into? Are you Big Ten now?
No, I'm not sure at this point.
I mean,
it's very confusing, actually.
I mean, where do the kids? I mean, USC, UCLA. I mean, they're now playing in the East Coast. They're all over the place, aren't they?
Yeah, I used to be able to drive to a game. You know, and now I need to fly or take a bus or a train or something. You know, else.
I don't know what's going on. I see these kids in the airports. Even yesterday, they're like, you see these kids are like they're playing like volleyball for USC, and they're traveling to UVA or something.
Over.
It's unbelievable. All right, Dan, thanks so much for joining us. Dan Genter, President, CEO, and Chief Investment Officer at RNC Genter Capital Management. He's joining us here in our Bloomberg Interactive broker studio. But yeah, you see the kids, I mean, even for like these non-revenue sports, like not football, basketball, but, you know, like volleyball,
It's
softball.
not just D1, like a D2,
Yes,
getting on a plane.
they're all over they're making these kids travel all over the world. It's crazy with how the conferences have shaped out here. All right, S&P 500 up 15 points. That's 1/4%. We'll take that. Off the highs of the day, but still positive. The Dow's up 62 points. That's 0.1%. The Nasdaq's up, let's call it 100 points. That's 0.5%. So a solid day. The Tom Keene Memorial VIX is below 17, 16. Spot 95. WTI crude oil for Alex Steele, that's $66.60. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. In advance for the U.S. equity market, we are off session highs, but stocks gained after a better-than-estimated retail sales report and a drop in jobless claims pointed to economic resilience. Right now, we have got the S&P up 10, 62.73. That is a gain of just about 0.2%. Dow Industrials up 24, higher by 0.1%. NASDAQ up 91 for the NASDAQ Composite Index, a gain there of 0.4%. The 10-year 4.43%, the 2-year 3.89%, and the 30-year now at 4.98%. Gold down 0.4%, 33.33 the ounce. West Texas Intermediate crude 66.63 a barrel, up 0.4%, and Bitcoin down 1%, 118,730 on Bitcoin. Retail sales rebounded in June in a broad advance, potentially tempering some concerns about a retrenchment in consumer spending. Dana Telsey is the CEO of Telsey Advisory Group, and she was a guest this morning on Surveillance.
I think overall what you've seen that trade down, whether it's the dollar stores, whether it's the discounters and off price, value is definitely winning. And that lower income consumer, the strength of a labor market allows them the ability to spend, but perhaps the discretionary spend isn't as great.
Dana Telsey of Telsey Advisory on Surveillance. Uber teaming up with electric vehicle maker Lucid Group and self-driving tech startup Nuro to launch a robo-taxi fleet. Uber shares down 0.5%. Rival Lyft, both based in San Francisco, down 0.9%. Lucid, though, the big winner in this announcement, up 31.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you, Charlie. Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. United Airlines, right? They narrowed its profit range for the rest of the year, but they do expect travel demand to continue to rise. Now, earlier this morning, CEO Scott Kirby, he sat down with Bloomberg's Lisa Abramowitz, and they talked about United's earnings and also their outlook for the rest of 2025.
This year, a lot of uncertainty in the first half of the year, macro uncertainty, and that led to an impact on bookings and demand at United and across the whole industry. But it felt like there was a turning point at the end of June where the tax bill passed and the situation in the Middle East was calmer, and tariffs, while not certain yet, narrowing the range. And it really felt like people felt enough confidence or enough lower level of uncertainty that they kind of came off the sidelines and were unfrozen.
All right, that was United CEO Scott Kirby. Let's bring in the expert on all this, George Ferguson. He's Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst. George, thanks for joining us. Scott Kirby, he seemed pretty confident, did he?
He does, but I guess he always sounds confident, right? I think he's counting on some capacity cuts here in the second half, and he talked about some of the uncertainty going away. So I think it'll get better story. But yeah, 2Q for him and for Delta didn't look that great.
George, where's business travel today?
I'd like to tell you, but the airlines try to hide that. But everything we can parse out of sort of Delta and United earnings makes it sound like it's lagging the leisure rebound. It may be back to 2019 levels, but that would again sort of still be lagging. And so the sense I get is it hasn't come back as strongly as leisure, and these airlines are more pointing to high-end leisure as the driver of their profitability.
George, I have to point out Newark Airport because I'm a frequent visitor. There were a lot of issues there, right? Construction, Newark Liberty, there were outages, delays. When they asked, Scott Kirby about it, he said he was kind of, optimistic about it, but he also pointed out JFK. Would love to get in there. Has this been kind of a sticking point for United?
Newark for sure, right? Because Newark, they've got a strong concentration of flights out of there. He started the call too today. I got the sign on for first couple minutes of it before joining you, and he was sort of lauding what was going on at Newark Airport, and so I think it's I think we're starting to put behind us the FAA problems, but Newark is always a challenging airport. It has a lot of activity. He said the FAA and the constituents there have gotten real about the amount of throughput they could put around Newark. That would be good because essentially Newark suffers from a whole lot of throughput that's trying to get through that airport. And then you get in the middle of summer and you just have these weather events, thunderstorms, which we've been having, I think, every day now in New Jersey, which sort of roiled the whole deal. So he sounded optimistic that they've got a lot of the fix in place for the airport.
George, where are we on air traffic controllers? I mean, how hard can this be to staff this whole system up here? I just don't get it. What's the status?
Yeah, so, I mean, it just takes a long time to train an air traffic controller, longer than I would have expected. I mean, the last numbers I've heard were sort of over a year. I think I want to say it was like a year and a half, but I have to go back and check my numbers exactly on that one. During the pandemic, we had people that probably not too jazzed about entering that business because it was one of those where you couldn't work from home. I think that work from home world is fading a bit now, but back again during the pandemic, it didn't seem that exciting. And I think it has the problem that every other industry in America, especially the older industries, have, and that is there's a bunch of baby boomers inside it. They're approaching retirement and actively retiring at this point. And the backfill, again, it's not the most exciting industry, I guess, to go into. The backfill has been harder. Recruitment has been harder. And when you get behind on recruitment and training takes a certain amount of time, it takes a while to fill. And so we're still in that attempt to refill phase. Again, I think it's getting better as the economy, maybe as some of the labor market is not as white hot as it was coming out of the pandemic, but we're still behind the curve a bit.
All right, so we heard from United. We've also heard from Delta. You know all the numbers, but for me, what does it mean for airline fares? Am I going to have to pay more for a ticket coming up?
I think that there's going to be a stabilization of fares here, but when we look at the second half, we see capacity growth coming down. We still see capacity growth, though. And I think that we've seen it sort of around GDP. And we kind of think that around GDP levels of capacity growth doesn't firm fares and it doesn't cut fares. And so I think you've seen some cuts recently. I think you'll see this level of fare going through the back half of the year unless airlines cut more capacity, which would help them firm fares a bit more. But again, we see growth that's right around GDP growth. And so it doesn't look to me like a scenario where you're going to see strong growth in fares for the airlines.
George, can't let you go without talking about Boeing, because for me, it's just kind of my quintessential great American company, great engineering company, great manufacturing company, Seattle, Washington, one of the great parts of the United States. Where are they with their 737 deliverables? Because you've told us time and time again over the years that that's really a key metric for this company.
Yeah, so I think one of the great other American companies gave us a little bit of insight this morning, and that was GE, right? And GE supplies the engines to Boeing, and GE kind of guided down a bit on margins for the back half of the year here. I mean, guided down like they're, nice. Their commercial businesses are like operating margins in the high 20s, right, which is really super. And they guided down to sort of mid-20s. And that's a function of getting new engine deliveries into Boeing, engines for the 777, engines for 737. Boeing has done a better job of delivering. That's all about how they're going to win. And from what I heard from GE today, that's going to persist through the back half of the year, which is, I think, a strong positive for Boeing. Again, a little bit of an ebb for GE, but a strong positive for Boeing.
George, thanks so much. Appreciate it. As always, George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. All right, Lisa, big question for you. And this is going to tell me a lot about who you are as a person.
Oh, boy.
Aisle or window seat on the plane?
Oh, aisle.
Me too.
Yes.
All right.
No, because then I know, but then if people have to get up and go to the bathroom back and forth, that's kind of a pain, but.
Yeah, but it depends. Like if I'm on a short flight, I'll go window because I like flying into New York is always cool because 50% chance you're going to get the view of the city and all that kind of stuff.
Okay.
But it depends where I'm flying. I'm flying somewhere cool. Maybe I'll try the window seat. But by and large, I'm an aisle person. Like if you need to get up and take care of business,
you could do it.
Yeah, that's what I didn't ask George first. Coming up.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Lisa Mateo, Paul Sweeney live here in the Bloomberg Interactive Broker Studio in Midtown Manhattan, streaming live on YouTube as well. So check us out there. You can search Bloomberg Live Radio. All right, Uber is partnering with Lucid Neuro to launch robo-taxis in 2026. I'll do a robo-taxi. I mean, I get in a car every morning with a dude I do not know.
True.
And I trust him to get me from point
But
A to
there's
point
someone
B.
behind the wheel.
Yeah, but I don't know who this dude is. But I mean, I don't know. There's like 27,000 sensors on these things. I don't know. Mandeep Singh, he knows. He does this stuff. Senior tech industry analyst for Bloomberg Intelligence. What's Uber's strategy for robo-taxis? Because you could argue that, boy, that would totally impact their business model. Uber, if I don't need to share my money with them.
I mean, Uber's strategy under this CEO, Dara Khosrowshahi, ever since he has taken over, is to build scale when it comes to both supply, and that translates into adding more services. So that's why they expanded on their delivery side in such a big way. You know, they added food delivery, grocery delivery. It was all about
they bought Drizzly, which is the booze guy.
The booze guy, yes, he does know that.
Look, and now
Same for a
they're
friend.
doing the same with autonomous vehicle supply. So they have a partnership with Waymo in 2 cities, but then they are at the mercy of either a Waymo or a Tesla partnering with them. What they're doing here is, because they don't have their own AV efforts, really doing this minority investment in Lucid that makes about 10,000 vehicles a year, premium EVs. And also Neuro, which is a software maker similar to Waymo in terms of, you know, autonomous driving. They provide the actual technology and sensors and software for the vehicle to drive itself on its own. And it seems to be a sound strategy, you know, just to hedge their bets. What if the Waymo partnership doesn't pan out or get bigger as they hope to be? And that's where, you know, having this investment does make a lot of sense.
So how does this deal all work? I mean, break it down for us. It's certain like SUV Lucids? Like how does it work out?
I mean, look, Lucid, like I said, compare that to Tesla making 1.8 million cars a year. Lucid makes 10,000 vehicles a year. So it's a much smaller company in terms of the number of vehicles. But at the same time, everyone who owns a Lucid, they like the experience. It's one of that premium EV cars that never took off. And that's why adding that sensor technology for autonomous driving on top of Lucid does make sense, because Uber, like I said, it's all about adding more supply. They want to cater to every segment, premium segment who wants to use AV vehicles as part of their daily routine. And that's where, you know, they are thinking long term, okay, do we have AV supply for all types of segments? And this could be something that we have an investment in, and I think it's not a big amount. It's not an outright acquisition that they're making.
Well, you know, Paul, they said the Lucid was the car of the Hamptons. Like, that's the new thing now. Yes.
Oh, okay.
So
All right.
you never know.
Very good. I mean, I'm not sure what the car of the Jersey Shore is. It's the Vespa you see me cruising on. All right, the market cap of Uber Technologies, $188 billion. It's up 50% this year. What's driving that?
I mean, remember the time when Lyft used to be 30% of Uber?
Yep.
That has changed completely. Now Lyft is like 3% of Uber's market cap. So that's where that scale strategy under the CEO has worked for them. That really has been the key differentiator between Uber and Lyft, and what explains that, you know, almost $200 billion in market cap for Uber. And look, I think they're doing the right thing here by adding more scale, because otherwise you run the risk of getting disintermediated, especially a Tesla, which wants to go on its own. They don't want to partner with anyone.
All right, Dara Khosrowshahi, the CEO of Uber, he got his most recent year comp, 4.2 million in cash compensation, 39.8 million of non-cash compensation, i.e. stock. That stock, since he got that, is up 23.8 million. So his current pay value for that year is $68 million. This dude's worth every penny, right? To shareholders? I mean, I'll pay this guy whatever he wants, right?
Well, his fortunes have really turned around this year. Up until 2024, the stock didn't do that well. So really, this year, with Bill Ackman taking a stake,
I
and
forgot about that.
so there have been a lot of catalysts that have played out in favor of Uber. And like I said, Lyft not performing because of their lack of scale really validated Uber's strategy. So I do think he has had a good run.
Yeah.
Well, Paul makes fun of me because I only have the Uber app. I don't have the Lyft app, and he kills me all the time. The quick 30 seconds that we have here left, robotaxi fleets. We don't know where this one is going to take off, right? Can something like this work in New York City, robo-taxis?
Well, Waymo's trying to get a permit here. So in my mind, Uber wants to fill in the gaps where they don't have a partnership with Waymo. So right now, Uber has a partnership with Waymo only in 2 cities, Austin and Atlanta, not in San Francisco, Phoenix, and other cities where Waymo operates in. So this allows them to add more AV vehicles in cities where Waymo doesn't want to partner with Uber.
Would you get in have you been in a Waymo?
I have, yes. I love the experience.
Really?
Yes.
So you get in the back, there's nobody in the front, and the car just goes.
Yeah, I mean, and the car is reliable in the cities where they operate. Waymo now has 100 million miles, driven miles. So how much validation do you need?
You're right. All right. You sold me. I'll give it a shot. I mean, I don't know. Maybe not in Manhattan.
No, I saw him in San Francisco. I thought about it, but no.
You didn't do it.
I pressed the pause button on
All right,
that.
Mandeep, thank you so much. Always a great talk. Mandeep Singh, Senior Tech Analyst. Driverless car dude. Who knew that? Bloomberg Intelligence. For our listeners in the U.S., folks, a reminder, you can listen to us on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, folks. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Coming up in this hour, we talk to Mari Shore. She's a senior equity analyst at Columbia Threadneedle. We always like to talk to her. She covers the retail space, get her thoughts on these retail sales that came out this morning and what we might expect from the retailers here as we think about, believe it or not, back to school. I don't know. I'll throw it out there. Ken Shea, Bloomberg Intelligence senior consumer products analyst. PepsiCo, or as I like to call them, Frito-Lay. PepsiCo put out some numbers here. We'll get the sense of how Pepsi's doing. Punam Goyal, senior U.S. retail analyst, will give us our mid-year outlook on some of the retailers and the e-commerce players as well. It's Thursday, which means we talk to one B. Ritholtz, Barry Ritholtz. He's going to talk to us. He's a Masters in Business podcast dude. He owns Ritholtz Wealth Management as well. Have no idea what we're going to talk to Barry Ritholtz about, but I guarantee you it'll be a good 7 minutes. We got a lot coming up with Barry Ritholtz. Charlie Pellet right now joins us with a Bloomberg Business Flash. Charlie.
Hi, thank you very much. Ask him about Netflix. They report after the close of trading today. Netflix ahead of earnings, up now by about 0.6%, all part of a broader advance for the U.S. stock market today with the Dow, the S&P, NASDAQ, all in the green right now with the S&P up 17.6280 where we stand. That is a gain right now of 0.3%. Dow Industrials up 68, up 0.2%. NASDAQ up 120, another 120, up by 0.6%. Stocks higher after a better than estimated retail sales report and a drop in jobless claims pointed to economic resilience. The 10-year, 4.43%, the 2-year, 3.90%, and the 30-year, 4.98%. Gold down 0.4%, 33.34 the ounce. West Texas Intermediate crude up 1%, 67.06 a barrel, and Bitcoin down 0.9% 11,880 now on Bitcoin. So an up day for the U.S. equity market. These have been rapidly moving markets in recent weeks to the upside. But what about some advice for investors? Cameron Dawson is Chief Investment Officer at New Edge Wealth.
I think that you have to just stick to your knitting on earnings and understand that U.S. companies are incredibly good at adapting and navigating through uncertain environments. Don't be whipsawed by the headlines. We've learned that over the course of the last few months, and just continue to have a plan to be able to buy into weakness if that does materialize. But keeping a steady hand and a calm mind, I think, is important in times like these.
Cam Dawson of New Edge interviewed this morning on surveillance. Uber teaming up with electric vehicle maker Lucid Group, as we heard from our Mandeep Singh, and self-driving tech startup Nuru to launch a robo-taxi fleet. Right now, Uber down 0.4%, Lyft down 0.5%, but Lucid surging by 40%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you, Charlie. This is Bloomberg Intelligence. It's time to take a look at some of the stocks on the move today. I'm Lisa Mateo alongside Paul Sweeney, and we are joined by Bloomberg's Natalia Najevich. Want to start out with, well, Paul calls it Frito-Lay. It's Pepsi.
It's Pepsi, right.
It's Pepsi. But they have other brands, Gatorade, Quaker. How are they doing so far?
Yeah, so shares of Pepsi, ticker is PEP, are up by 6.4%. The company maintained its outlook for the year, and also sales growth beat analyst expectations. Interestingly, that the sales growth is mainly driven by international purchases and growth. I don't know what to make out of it, because maybe, I don't know, Americans don't drink Pepsi anymore.
Are you a Pepsi or a Coke person?
No, I'm trying to be super healthy. Just water with lemon.
God, you guys are killing me here.
I know.
A girl on my same page here.
So organic sales growth for the second quarter was 2.1%, again, beating expectations. Pepsi, however, said that it continues to expect incremental supply chain costs throughout the end of the year. Piper Sandler analyst is also saying that North America food segment is still challenging. The growth is coming from international sales, and RBC analyst is saying that this stock price reaction is not actually surprising because expectations were so low ahead of this report.
Okay, all right. I mean, again, you throw a Pepsi in front of me, I'm happy as a clam to drink that. United Airlines.
Yes, United Airlines ticker UAL. Shares are up by almost 4%. We know that the carrier dropped its adjusted earnings per share forecast for the full year. We know that flight disruptions driven by this air traffic control outages and also construction in Newark Liberty International Airport dragged down some of those results. But United Airlines said that the second half of this year could be a little bit more predictable, and the management said that there is a chance that they could beat earnings expectations. At the same time, they also mentioned that this recovery among low-income consumers is still challenging. It still sits at somewhere around 50% of what the company expected in the beginning of the year. And they also said that inflow from European tourists and international students is challenging. I don't know what to make out of international students. Is it like people are saving money, or is it a visa issue?
I think it's the latter. I think I've heard from Duke University, it's a super, super big problem getting their international kids in. Yesterday, I did the first thing, which I'm 61 years old. How often do I do something for the first time? Very rarely. I went to Newark Airport via mass transportation. I took the subway to Penn Station.
And you're still alive.
New Jersey Transit to Newark Airport.
Yes.
The air train to the airport, and then a little shuttle bus from the air train to Terminal A. I tell you, it was, I'm guessing, half the time from a car service from the Upper East Side here. Because it takes an hour to get out of the city from the Upper East Side.
Right,
To
so
get
you didn't
across.
hit all the
So
traffic.
I think I'm going to do it all the time now. So a new thing at this age. Go figure. Lucid.
Lucid, yes. Shares are up by 37%, but keep in mind, on a 12-month basis, they're still down by 22%. There is only one buy rating for the stock. We know that Uber Technologies is partnering with Lucid and a startup called Nuru to launch robotaxi fleet. The plan is to deploy about 20,000 robotaxis over the next 6 years. And separately, Lucid also plans to do this 1-for-10 reverse stock split. Companies usually do that to avoid delisting, but you guys spoke about this robotaxi. I don't know if I would be brave enough to take robotaxi in New York. I don't think so, because people drive like crazy here.
They do.
Exactly.
It's the Wild West.
But it's the bike people now. I mean, the bike people and
yes,
there are a million of them now for the delivery people. And then it's the people going in the opposite way on the one-way street on the bikes that'll kill you. That's going to be the one that's going to.
I was this close to being taken out.
I know.
All right, Natalia Najevich, thank you so much. For more conversations like this, you can subscribe to our new Stock Movers reports. You can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. All right, we go from that to economic data, right? A big day for retail sales, better than expected report. Here to break it all down for us is Mari Shore, Senior Equity Analyst at Columbia Threadneedle Investments. Mari, thanks for joining us this morning. I have to ask you, were you surprised by those results? I mean, strong consumer.
Yes, absolutely. Thank you for having me. The results show that the consumer spending has been very consistent and resilient throughout this period, despite weaker consumer sentiment and fears about rising inflation. But when we look at the category data, most of the categories showed slight improvement versus last month. There was only a couple of categories, like some bigger ticket categories, where I think we saw some forward buying earlier in the spring. And also I would call it the non-store retail category, which is largely Amazon. We did see a slowdown there, but that could also be due to consumers waiting for the July Prime Week, which is always a huge seller for Amazon. So I think, when we step back, the results are really consistent with what we've been seeing for a couple of years now post-pandemic.
So, Mari, we've heard about companies kind of building up inventory and trying to get ahead of maybe some tariffs there. Are we seeing consumers buying to get ahead of tariffs as well?
Earlier in the spring, we did see some bigger ticket categories like autos and home-related purchases, where I do think there was some forward buying going on. But when you speak to the companies about it, it sounded like it was very short-lived, and it was really not a significant driver for them in their Q1 sales performance.
Where do you see the weakness in retail? We've been hearing a lot about the luxury sector kind of dropping off a bit.
Yes, luxury has been under pressure for some time now. I think there's a multitude of reasons. I think it's, demand normalizing post-pandemic. There's been a lot of pricing taken in those categories, and I think there's maybe some pushback there. And then finally, I think luxury consumers are spending on different things now, more experiences over things. And so I do think that we have seen the luxury companies struggling for some time, and that appears to be continuing. Outside of that, there is some concern, among lower income consumers. But it seems like the results there have been pretty consistent outside of some weakness in some border states and cities where there are greater concerns surrounding immigration. But again, when I look at the category performance, it's been really consistent with what we've seen for years now, which is consumers spending on needs over wants, and within the wants, spending more on health and wellness and apparel relative to other bigger ticket categories like home-related goods and consumer electronics.
So I know it's only the middle of July, and I hate to ask, but back to school, what's the outlook?
The outlook for back to school is pretty similar to what we see today. Originally there had been more concern, I think, about higher inflation coming through with back to school. But as we heard from the companies that just reported Q1 earnings, a lot of them were largely able to offset some of that early tariff pressure with sourcing cost efficiencies, taking some of that hit on their own gross margin, and then only having to pass through more modest price increases in aggregate. So I think now the inflation outlook as we move into back to school is for, maybe low single digit inflation across some of these goods with heavier reliance on imports. But I think that will still be manageable. The bigger concern that I see is as we move into holiday, if tariffs do escalate from here, that means that the companies will have to take greater pricing as we move into holiday. And that's where I think we could see even greater consumer pushback to higher inflation.
All right, Mari, great stuff. We always appreciate checking in with you, Mari Shore, Senior Equity Analyst, Columbia Threadneedle Investments up there in Boston. Let's get back down to Washington, D.C. Lots of stuff coming out of Washington, D.C., which is pretty much a daily occurrence these days. Nathan Dean, Senior Policy Analyst at Bloomberg Intelligence. He's down there in D.C. in the muck. Nathan, I'm looking at Bitcoin here at 119,000 bucks here. There's something called a crypto week in D.C. What's the Trump administration policy regarding crypto, and why is this week important?
Yeah, so this is Crypto Week from the House of Representatives because they're going to vote on 3 separate bills that deals with crypto. The most important to us right now is called the Genius Act. This is a stablecoin bill, and once the House votes on it, which we think will come probably this evening around 7:30, it will become law because the Senate already passed it. So allow firms like Circle to go forth and actually have a regulatory framework and be able to operate knowing what the rules of the road are. Now, there's another bill out there called the Clarity Act. Now, this is broader, so if you're into Bitcoin investor, this is the one you should be paying attention to. And this one is going to most likely pass the House probably tomorrow, potentially could get pushed back a little bit. But the challenge with the Clarity Act is that, yes, it is going to provide a regulatory framework for companies like Coinbase and Robinhood, but it's going to need more time to cook. There isn't agreement on the Senate Democratic side. It hasn't passed the Senate. And so come September, after the August recess, we think the senators will come back and they'll actually just look at it from their own perspective. And I don't think this is going to have any chance of passage until early next year.
Nathan, talk more about the Bitcoin reaction to all this, because we saw it go, above 120,000. Now it's at 118,000, down 1%. It's this kind of back and forth. Dig more into that for us.
Yeah, so a lot of the Bitcoin investors want institutional adoption of crypto, and that would come through the Clarity Act. The Genius Act, think of that as the first step because that's stablecoins only, so that's allowing a taste. I mean, we heard on many bank earnings calls this week that many banks are now considering stablecoins, and so that is beginning the stages of institutional adoption. But the Clarity Act is really the key thing here because the SEC can only do so much because they have authority over securities, and Bitcoin is a commodity. And the Commodity Futures Trading Commission, as of yet, does not have authority to oversee Bitcoin. So Bitcoin and Ethereum, a lot of these currencies that the crypto world wants to investigate or invest in, it's sort of outside of this regulatory framework. So for that institutional adoption, you need the Clarity Act. And so that's where, if you're looking at Bitcoin in particular, Clarity, not Genius, is what you should be paying attention to.
Nathan, what are your clients asking you about this time? Because there's so much going on in D.C., and you're one of the few folks out there that really has the finger on the pulse. What are they asking you these days?
Well, obviously, there's been a lot of discussion now that the One Big Beautiful Bill is done. What's coming next? And we would say is it's deregulation. Because if you go back to Treasury Secretary Scott Bessent's 3 pillars of economic growth, tariffs, taxes, and deregulation. Taxes are pretty much done. Now we're going to implementation phase. Tariffs, obviously, August 1st is the big deadline that's coming up. A lot of questions on, is it going to be